Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey everyone, good morning, welcome. Thanks everyone for joining. We're gonna get started in a couple minutes. We're gonna go for 7 to 10 today, and then post New York with Dave, and then 1 p.m. we're gonna start our live FOMC. So we'll go from 1 to 3. So a lot of sessions today. There's a lot of news, and especially FOMC, and a lot of big name earnings in the after hours. So it's a really busy day, and it's midweek. So we'll see how everything goes, and it doesn't get any easier this week. Thursday is also busy, and then Friday is NFP. So, and we get into the end of the month, and then we start fresh Monday. Wow. So lots going on. Just trade with proper risk management. That's all you can do on a tough weeks like this. Don't do anything silly, because you might regret it later. So give me a couple minutes. I'm just setting up YouTube, and then we'll get started, okay?
Hey guys, good morning. Welcome to the live session of Stocks Never Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Recording in progress.
Hey, welcome everyone. Welcome to Stocks Never Trading. My name is Ron. My partner is Dave. Welcome, guys. It's almost 7 a.m. Eastern, and it's a beautiful morning. It's Wednesday, July 30th. So thanks everyone for joining. We do appreciate you guys. Today is a really busy day in the markets, news-wise, everything that's going on. So we're going to go for a New York session from 7 till 10 a.m. And then we're going to have our break, and then Dave will be doing post New York right after. And then after that, then we're going to start FOMC, live FOMC at 1 p.m. and we're going to go till 3. So there's going to be a lot going on today. And also in the after hours, there's some big names reporting right at 4 p.m. today. So busy day. Tomorrow it's going to get busy as well. And then we're going to top the week off with Friday NFP and to start the new month. And also, guys, end of the month, also expiration dates for options, futures rollover contracts. And so make sure you know the implications of all of that, okay? So let's get started. Welcome everyone, and if everyone on YouTube can hit the like button, that gets me pumped up, and we can start with the likes. We can start subscribe to the channel, and let's get into this. So we will be doing a little bit on gold and US 30 and Nasdaq, but first let's go over all of this news. I know a lot of you guys have already been updated with all the news and things like that, but just a little refresher to get everyone started. Look at today's schedule. So it is very busy. It takes up one whole screen on my chart here. So it started in Europe. You can see it started 1:30 a.m. Eastern. This is pre-London. There was some European news. You have some French and German news, Spanish news. This is London market open. And then now we're kind of moving into pre-New York. So you can see we're coming into right now 7 a.m. We're going to come into 8 a.m. And then you see here we have a red folder at 8:15. It's a US red folder, high impact. It's ADP, non-farm employment change. Big difference in the number. Previous was negative 33,000, and you see what they're forecasting, a positive number of 77,000. So that's a big swing, almost 100,000 is the swing there. So we'll see what the actual number is. And right now the US dollar it's pretty strong. It's strengthening itself this entire week. So we'll keep an eye on that. And then we have at 8:20 COMEX market open. So we'll be looking at gold at that time. And then 10 minutes later, we do have some more US news. At 8:30, we have the high impact red folder, advanced GDP quarter over quarter. Previous was negative 0.5, and you can see the forecast is a significant increase to positive 2.5%. So that's the advanced outlook. And then we get the advanced GDP price index over here too. And then it doesn't get any easier. Then we move into Wall Street, and Wall Street can be significant too, because we have some pre-market earnings as well that could affect the way how Wall Street market opens. And then at 9:45, we have some Canadian red folders. We have the Canadian bank rates coming out today. So I live in Canada. I'm interested to see what they're going to do with this overnight lend rate. Pretty much, I think it's going to be a pause. But we'll see what will happen. In the labor market in Canada is pretty good, pretty strong. So we'll see if they decrease would be nice, but pretty much pauses on the table for both US and Canada. But we'll take a look at this. This will be 9:45. They'll release it. So we have the Bank of Canada monetary policy report. We have the Bank of Canada rate statement. And then we have the overnight lending rate right now, which is sitting at 2.75%. And the forecast is for a pause at 2.75. We'll see the actual result when it comes in here at 9:45. And then we move into 10 a.m. and we have some pending home sales in the United States. We have the Bank of Canada press conference. If you want to tune into that after our call, that's at 10:30. We have our weekly crude oil inventories coming out. And then Dave will take over post New York. Then we'll have a break ourselves, and then we'll come in and do live FOMC at 2 p.m. today is when they're going to release everything. We'll start 1 hour early to get us prepared for it. So we'll come in at 1 p.m. and you can see it right here. The market is anticipating this for the entire month, and now it's come down to the week and it came down to the day here. President Trump wants a decrease. Powell is holding steady at the Fed. So we'll see what happens here. We have the U.S. federal funds rate today. It is sitting at 4.5% from the previous FOMC, and the forecast is no change. So it's sitting at 4.5%. We'll see if there's an increase, which is highly unlikely, like a less than 1% chance that we'll see an increase. So maybe we can take that off the board. There's a 94% chance right now that it's going to stay steady, 4.5%. Okay. And then there's a 5% chance that there could be a decrease in the U.S. Federal funds rate of a drop of 0.25%. If there's a drop of 0.25%, we could possibly see the markets rally, the U.S. dollar rally, and maybe a sell on gold. But if it remains how it is at 4.5%, again, the markets will react, but it's more looking for this at 2:30 p.m. Eastern. This is where the FOMC press conference starts, and this is where Powell comes to the podium and he explains the decision on what they decided, whether it's an increase, pause, or decrease. He'll explain that, and then he'll answer some questions from the reporters. And more importantly, he gives forward guidance as how the U.S. economy is doing and what to expect in the future. So it's kind of like a futures outlook, and a lot of traders and investors look for that forward guidance to position themselves in a new month of expiration, in a new month of rollovers, and to predict what the future moves will be in the markets. Okay, so it's going to be pretty intense day today news wise. Lots of red folders. All we can do as traders is just trade carefully, trade with proper risk management. I already know how much I'm risking today on the entire day. If I get stopped out and I lose that percentage even before FOMC starts, I'm done for the day. That's the way how it works. You know, like it's like a baseball game. If you get strikeouts, you're out of the game. You got to wait till your next at bat. So same with trading. If you set yourself up right now with how much you're willing to trade with, how much is your daily risk, if it's reasonable and it's sound, and you get stopped out, the market is telling you something. It's telling you that you need a break, you need to review your trading plan, and you can come back at another time. But please trade with proper risk management, okay? These are those days that can blow up your accounts. They can take away everything you've earned in the last couple days, weeks, or months, depending how you use your leverage. And every trader uses leverage differently. So I would recommend proper risk management. That's it. That's for you to discover and learn about, okay? If you haven't learned about risk management yet, I'm sure that you're going to learn about it at some point in your trading career, okay? And then the market kind of cools off news-wise, and then we move into the end of the day, but we have some big earnings in the after hours that we're going to talk about, so it doesn't stop there. But the news-wise stops, then we move into Sydney, Australia, you move into New Zealand, you move into Tokyo in the futures market outlook, okay? And then there's some news coming later tonight out of China, and Bank of Japan has their monetary policy tentative. Normally around 9, 10, 11 p.m. they release, okay? So that's everything. You can see Fed unlikely to cut rates despite pressure from Donald Trump over here. So we'll see what they say. U.S.-China tariff truce holds for now, but U.S. says Trump has a final say say that's in the markets as well. Okay, so that's news-wise today. Now let's just talk briefly about earnings, pre-market earnings. Is there any specific corporations? Like yesterday we had United Health, which was reporting at 5:55 and 6 a.m. There was a big drop on US 30, and it continued throughout the day with that bearish pressure. Which big names do we have today? We have Vertiv, we have Etsy, Altria Group, Humana, Kraft Heinz Company, Generic Holdings. So I'm going through these. They're big name companies, but I don't think that these are going to have a high impact like yesterday United Health did on Dow Jones. What I think is in the after hours, guys. Okay, so if we can shift focus more to the after hours, this is where you have your big names. Okay, so this will affect the markets. And I just went over today's news. We have USGDP. We have Bank of Canada rates. Then we have the US FOMC. And then look in the after hours at 4:05 today when the markets close, you have Meta Platforms reporting. So this is formerly Facebook. This is a big company. It's one of the Magnificent Seven. Then we have, at the same time, Microsoft Corporation, one of the biggest in the world. Okay, so two of the biggest corporations in the world will be reporting in the after hours today. Will dramatically impact how S&P is moving, NASDAQ, and also Dow Jones. So please think about your trading plan. Are you going to be trading in the after hours? Are you holding positions overnight? Do you have you been doing your due diligence on Meta and Microsoft, seeing how they are performing from their previous earnings? Have you listened to their conference call? Have you been following these companies? Do you anticipate them beating their estimates or a disappointing earnings? So you have your earnings per share and you have their revenue already estimated here. So then we have Robinhood Market. Some of you guys trade with Robinhood. It's a publicly traded trading platform over here. You can invest, you can trade the company. There's Carvana, and then we got APLD, Applied Digital Corporation, Qualcomm. But we have Ford Motor Company, Kinross Gold Corporation. So you got gold mining companies also reporting, eBay. So there is some big names out there, but the two on the top are the biggest. Okay, so Meta and Microsoft. So please be careful and understand that there could be volatility, and make sure if you're trading in Power Hour near the close of the day, you have a plan of how to tackle this stuff. Okay, so busy day on the news wise. Okay, and then just right over here, some quick news on the day when you're reading or having your daily coffee. Fed set to hold rates steady, defying Trump's call for a cut. The Fed decision comes amid internal divisions and intensified pressure from Trump. You can click on the article, read it right here. Over here, U.S. stocks stall ahead of the Fed decision at 2 p.m. today. Big tech results, Meta and Microsoft in the after hours. What else we got going on? Okay. Again, Trump eyes 25% India tariff, U.S.-China truce in the balance. That's in the news. Trump mounts new attack against wind projects on federal land. Tesla signs a $4.3 billion battery deal, cuts reliance on China. That might be pretty positive news coming out of routers this morning on Tesla. Okay, so if I'm a Tesla shareholder, if I'm trading it, I want to keep an eye on this news article right here. That's big for Tesla to sign $4.3 billion battery deal and cuts reliance on China. So that's significant. I would be watching that. What else do we got? Futures steady as markets look for the Fed decision. Mega cap earnings, what we just talked about. Okay, there's related articles you can read. But it's going to see. And then we have Apple earnings also later this week. So Apple earnings under pressure from tariffs and slow AI rollout. So we'll see Apple's earnings this week. So in the futures right now, pretty flat markets. S&P futures are up 0.1%. Dow is pretty much flat, 0.04 right now. And NASDAQ is up 0.2%. Gold flat as well. Okay. So we got a lot to do today, guys. Lot of news, high impact news. So it could be very volatile, guys. Again, I'm going to stress this: trade with proper risk management. Okay. And then just looking over here. Okay. So there's a little recap of the news. So today's FOMC day and Friday's NFP, making this one of the busiest news weeks we've seen in a while. Expect things to be slower until the key events hit, especially around FOMC later today. So trade safe, trade smart, use proper risk management. No need to force setups and volatility. Let the market come to us. Stay sharp, okay? And just over here, we did some outlooks over here on gold. So that's one security we'll be taking a look at today. So the price of gold has remained relatively stable over the past 24 hours. Given the marginal increase in price, investors may see this as a sign of resilience and potential for a gradual uptrend. However, the minimal price movement could also indicate lack of significant buying interest, leading to potential consolidation or a minor pullback in the short term. Okay, and we're also going to look at NASDAQ and US 30 today. So just brief little outlook on US 30 in the last 24 hours. You can see the price and what percentage it is. The US 30 Dow Jones is showing minimal movement in the last 24 hours, probably ahead of all of this news we have. Given the slight uptick, investors may find comfort in indexes' resilience and potential for further upside. Okay, and remember, yesterday was US 30 was affected by their earnings from United Health. Okay, so we'll keep an eye on everything, guys. We've got a long on Forex over here, long on USD JPY at 148.174. If you guys want to keep an eye on that area at that level of USD JPY. And remember, later tonight, Bank of Japan has their monetary policy as well. Okay. Okay, and everyone on YouTube, again, if we can hit the like button early, get things going. We didn't reach 200 likes yesterday. We got, I think, 180. So remember what we were saying. We need 200 to get that live FOMC for you guys later today. That's up to you, because we'll be in the Zoom, we'll be doing it, but we want to include you guys. But there was not 200 likes yesterday. So what I did is, we'll let you guys one more time on this session. If we get 200 likes, we'll stream FOMC with you guys later today. If not, then I will myself will be privately with the snipers in Zoom, and we'll go about it. Okay, so this is a free Telegram channel. It's pinned at the top of the channel for you guys. It gives all of our YouTube links, shows everything that we're doing here, some trade idea, SST signal recaps with the trade management. And we give you guys free blogs. Here's how to trade the news. This blog was specific for this week. Some of you guys read it over. Some of you guys just don't even look at these things. That's up to you. You know, it's all a part of your education. Whether you want to get educated or not, you know, we're not here to force anything upon you guys. There is some promotions here at SST. If you do want to join the team, check out those codes when you check out. But education-wise, we're big on education. Some traders are not. They don't care about education. It's just about how can I make money? How can I make money? But they don't want to learn how to make money. It's just we want just to take them and show them how to hit the buy and sell button. So sometimes that doesn't always work. So you got to kind of educate yourself in trading. Okay. And this silly camera just zoomed in on me. But here's the live sessions today. Okay, so we're doing the 7 to 10, and then you can see that there's Dave doing the post, and then later on we got our live FOMC. And and our blog is right over here. Go to more, click on the blog, and you have our blog right over here, where you have your weekly market outlook and how to trade some news. Importance of wicks in trading. On Friday, we're going to talk about the importance of the body of a candle and what exactly that's all about. Okay, so let's get into the charts now. Welcome. Good morning, everyone. Thanks for joining. Thanks, everyone on Zoom for joining. Welcome, guys. Samuel, good morning. Sanya, welcome. Good morning. Conrad, Nigel, thank you for joining. Red, welcome. Good morning. Dale, welcome. Trevor, welcome. Benita, there was an earthquake in the Japan region today, 8.8 magnitude. Wow, that's a big one. Um, yeah, that's pretty big. Hopefully, prayers go out to everyone in Japan with that earthquake. Trevor, Dax is trying to break out. Nice. Okay, guys. So let's get into this. Sorry for my camera. It's one of these AI cameras, and if I scratch my in my forehead or something like that, it takes it as a cue to zoom in to me. But yeah, so whatever. Let's get into it. Okay, so this is gold on the 5 minutes. We're gonna get started on the daily higher time frame. Break it down. I'm gonna do something different today. Normally, I go from the daily hour. Today I'm going to go show you guys how you can go from the daily to the 4 hour and get some 4 hour analysis, and then you can bring it down even lower. Okay, so we're going to just do something different and show you that you can always do something different. You don't always have to mimic what I do and go from the daily, hourly to 5 minutes. You can throw in some different time frames and analyze those as well. Okay, and everyone on YouTube, good morning. Thank you guys for joining. Rianne, welcome. Juby, welcome. Arun, welcome. Father Doug, again, if you can bless us with some good trading volume today and not choppy and consolidation, we would appreciate that. Tony Gold, welcome. MB, welcome. Thank you, guys. Okay. How's everyone doing? I just want to read this instruction real quick on this camera to maybe get it to zoom out again. Maybe I have to point my finger up like this. Ah, there it is. It's that finger point. So when I scratch my head, I guess it went down. But why doesn't it stay? Okay. Silly technology, guys. I hate tech. I don't know about you guys, but I absolutely hate it. Everyone asks me, Ron, what color is your Lamborghini? I say the color of my Lamborghini is my horse and carriage outside. I travel with horse and carriage. I don't have a Lamborghini. I'm that old, guys. Horse and carriage is what I do. Okay, guys, let's get started. Gold analysis. Welcome. Okay. All-time high. Guys, everyone should know about this now. 3,500. We should all know about the date when we hit it. Right there. There it is. All-time high, April 22nd. And since the all-time high, what is the range low? It came all the way down there. And there's basically our range low, 3,120. Okay. And that is our range of gold, okay, on a higher time frame. We're talking like monthly. Like this goes all the way back. We hit the all-time high in April. Last time I checked, we're at the end of July, almost going into August. So that's quite a bit of a range in here, okay? When we hit that all-time high, we got rejected. There's those two bodies of volume that you can quickly kind of consolidate and trap in there and get in the habit of forcing it into the future. And you see two tops, you see a third top, you see a fourth top, you see a fifth top we just hit, and then you can see stretch that into the future. Are we ever going to come back in here? Possibly. Or are we just diverging away from this big red block and the all-time high on gold? And we're going to continue to come down. Now let's find a nice supporting block right here. So you've got the bullish flag coming off of this 3-day uptrend. I'm not going to explain everything in detail because I do that on pretty much every single call. So if you want to go back and kind of look at everything, you're welcome to. But I'm not going to sit and explain everything because I do that on a lot of these calls. So it's kind of just getting repetitive and we're just repeating the same stuff over and over and over. But one thing I want to say is when you pick a zone, stretch it into the future. And then that's how you can see maybe you'll catch a second top. Maybe you'll catch a third top. Maybe you'll catch a fourth top. Maybe in the future we might catch a fifth top. You know, like maybe we'll come back down into this supporting area and we might have a buy down here. Okay, so you can see how we broke down. That's what got that range low. It came right back up. Then it was barcoding near this green zone. Bearish, bullish, bearish, bullish. But notice off the bottom, you got a higher low, a bullish ignited daily candle, a higher low, and the volume continued to push for a new higher high trading inside there. Another thing to note are these two low wicks right here where it pulled back down into here, May 29, and it pulled back right here on June 30. Those are equal bottom lows. And there's a technical a technical explanation for what are tweezer bottom lows and the impact of those in the markets. I explain those on the lower time frames when we go into the 5 minutes. We see a lot of those, and you'll notice what the significance of those are. They didn't break for a new lower low, and they're protecting this green block below us. So since then, how has the market been performing? It's been making a higher low, and now we started to break that low right there on Monday this week, and we're kind of rotating back up. This is still Monday's low. This week's low is still higher than July 9th's low. It's still higher than June 30th low. It's still higher than these lows. So it technically still is a higher low on an overall higher time frame. But right now we're in a weekly downtrend where it started last Wednesday. So it's 1 week to this day. So that's a weekly downtrend. Okay, it's making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. No more lower lows currently, and now the market could be consolidating or trying to make its way back up to retrace back up to a point of control, or it just could be a small pullback and the market continues to dump on gold. Okay, now let's figure out some points of interest on the daily. So number one, you guys probably know what I'm looking at. I'm looking at this one, 3285. I've kind of memorized this number, and I know exactly what to look for when I see this number. You can see how it held bodies and support right over there. You got like 2 retests and still holding. Are we above 3285? Yes, we still are. Okay, another point of interest, this area right here, 3357, 3358. You can see how like bodies came right up there and they stopped right there and pivoted right back down. You can see where it kind of retested it. When this bearish candle closed below, you can see where it came right back up. Look at where it kind of pivoted right back down. Again, you got impulse, 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 no volume closing above that yield line. The bodies reacted right there. Okay, so now we are below it. So 3357, 558 is a daily point of interest of resistance. 3285 is a daily point of interest of support for us right now. Like I can go even further inside these 2 yellow daily points of interest. If I do that, I want to look for another point of interest in between. Where could I look for? Maybe this one right here. Why this one? Because I've got a body close right there. I've got a body kind of close right there, a body open right there. There's a bearish body that came all the way down impulsively, but when it came up to close, it closed right at that yield line. You got bullish one. Again, I can sit here and talk bullish, open, this, that, but you can see now how it's trading with today's volume or with this week's volume. So yesterday, the buyers did in fact close above that point of control, that point of interest. And you can see that we're using it as support for our lowest point of the day right now. Okay. So that is a critical point of interest on the daily. Okay, so just recapping what's going on. We had this big fake out, the 4th top up here, 1, 2, 3, 4, where we came up Monday and Tuesday of last week. Then we had a midweek reversal Wednesday, Thursday, Friday, and then we opened this week, continuing to push down on Monday, which took out that low. But now we're slowly maybe coming back up. But remember, we have a big day news-wise, okay? So market could consolidate. Yes, it could take another leg, but try and come back up here. Or it could just come right back up and then they slam it down. This could be like, like a counter trade back up against this weekly downtrend. And today is Wednesday as well. We could have a midweek continuation with what's going on already on Monday, on Monday and Tuesday of this week, or we might just have a midweek just come up and then continue with this downtrend. So we'll see what's going to happen. Probably it's going to be like a sideways choppy day leading until we get that FOMC. But just looking at these daily candles now we dissect more as to what's going on. So let's just kind of start with Friday. Friday was open bullish, came up, but then quickly got rejected. We filled Thursday's wick and made a new weekly low. It came down there. Then we closed back up right there for the weekend. Over the weekend, they gapped it up on Monday when we opened up. It did initially come up bullish. We're still below 50% of Friday's volume. and they pushed it back down. We created that new low and right there. So now just looking at these kind of candles in here. So just looking for a daily point of interest just from Monday's close this week and Tuesday's open right there, 3,313. And then below it, I've got a wick and a wick. And then when I look back to the left, I've got a wick there, and then I've got a nice bullish body inside there. So what I do is kind of grabbing that bullish body to the head of it, which is like a bullish pin bar candle. And then if I bring it into the future, I can see when that daily candle came in there, it went back up. Then I can see this week, when we came in there Monday, it came right in there and back up. I can see yesterday, we came in there again, higher low and volume closing above. So I'm going to stretch this green zone into the future, and that could be where, if we come back in here, could be a possible double bottom. It could continue to come in here and create support and get buyers and continue to drive back up. But if we pull back in here, we'll see if it can hold support. If the sellers cut right through here and cut right through and maybe push it back down and close it below here, coming back up here, buyers will be interested in buying, but now you'll flip that zone red because it could be more offers and the market wants to continue going short and continue dropping. So that would be a block of interest that I'm watching to see what's going to happen on gold this week. Okay, so far it's holding, and then let's just follow the volume from yesterday. We came down. Okay, we opened, came down. It was initially bearish, higher low in the green zone, picked up. The buyers brought it really nice up and bullish yesterday. That was the highest point yesterday. We almost came back to this original point of interest. So somewhere in here, you got to have a yellow line. You can either have it where we closed on Friday, or you can have it where they gapped it down and opened it on Monday, okay? Or if you're just undecided, you can keep it right in the middle of both of those gaps and keep it right there. That's up to you. I'll keep it right there, like in between there. And it's a point of interest around 3337. We're still below it right now. We did come up yesterday. We could not come into there, lower high, and then they pushed it down. Now relative, where did we close? So what I'm looking at is I'm still continuing with this bearish candle right here. And I want to find where 50% of that bearish candle is. Why? Because it's an important candle. It started the week. It's Monday. And it was a really bearish volume. So where's technically 50% from when that candle opened and when it closed? It is right there. That's 50%. Okay. So I can draw, and then I'll move these lines, but I just want to show you. There's 50% right there. Okay. And it's kind of pretty much where we opened today, just a little higher. It's a nice number, 3,325. Can I find maybe continue with that bearish candle and find a bearish zone out of it? Okay, so then I can see relative to how yesterday and today's volume is still trading. So you can see yesterday we came bullish, cut right through there, but then they rejected it back down, and look at where we closed. We closed right at 50% of that bearish candle. Today we opened and it came down, still trading in that red zone, but found some buyers. We came right back to the opening price. Again, they broke it out, and look at the high, look at the wicks. These are tweezer top highs on the daily. They look like equal high wicks right there. Exactly at 3333.97 cents. It came up there and they pushed it back down. It came up there today and they pushed it back down. So those are equal highs that they're not allowing it to go any further up. So that could trigger more offers to come in the market and continue to absorb what they're doing right now, today's bullish volume. Will it hold in here, or will it flip and continue to drop down? Okay, so that is an important points of interest. Okay, now just looking at today's daily candle. Okay, let's see now. That's exactly where I have it at 50%, that 3,325. I can move it up to the close, but I'm going to keep it right there, still representing this big bearish candle. I can see when it opened, it came all the way down. Okay, our low of the day is technically, it broke right through that zone. That's the low of the day. 3,321. So since we're so close, like see this 3,321 and 73 cents, and then I got this yellow line 3,322. It's irrelevant now. So what I'll do is I'll get rid of that yellow line and I'll base everything off of the more powerful low of the day today. I can see that they came down, they broke it, and now it's coming right back up. So then when it came all the way back up, you see the high of the day, point of interest, is equal high with yesterday. Okay, so I'm going to make that one purple to represent the high of the day, and it's also equal high, and they pushed it right back down. Okay, so we're trading in technically this red block. There is still bullish volume in there, you know, asking to trade up here. So maybe we might continue bullish coming up today and seeing if we can break for a new high, or is it going to come up and they're going to continue to reject this thing back down? And we could be trading inside this block, but we could come back down if the bears are in control, take this low and drop a little further down. Okay, so right now, this is how it looks on the daily. It looks like maybe we're consolidating, where we had this big push up, a big bullish push, then we came down, and now we're right back where it was kind of consolidating. So we might get some sideways action. Yes, it could come back up, but remember, it could come back up and then they slam it back down. Okay, or just right now where we're trading, it could possibly just come up a little bit and go right back down. Okay, it could follow this downtrend. Right now it's stopped. We found some support coming back up. Maybe it might be like a little pullback coming back up, and then they could continue to drop it down, and that would just be like it coming up, and then you get a lower high, and then sellers continue with the trend pushing it back down. Okay, so we'll keep an eye on that. And now what I want to do is, I said I'm going to do something different. From the daily, I'm going to move into, normally I go into the 1 hour. I'm going to show you guys how you can just do a quick little 4-hour analysis. So look at the 4 hour now, okay? So the 4 hour looks like a head and shoulder pattern. All of this looks like your your left shoulder. There's your head that broke out, and it's coming all the way back down, and it's kind of trading. It was trading in that shoulder area where they did drop it down yesterday with that big drop, and now it's slowly coming back up on the 4 hours, but it could just come back up and then they could slam it right back down. Okay, so you got to watch this 4 hour volume as well. Look how kind of like slow the 4 hour movement is. Where it's slowly making its way back up to 50% of this big 4 hour candle we had Monday at 6 a.m. and they pushed it back down. But notice the 4 hours in the green box, higher lows, higher lows, higher lows, higher lows. So, and they are creating that higher high. And we pulled back, still holding good support in here, came back up. But you see how the 4 hour candles are not breaking. So you have one attempt, it failed. Has another attempt, it failed. It has another attempt, it failed at this 3,333 area. So it's having a difficult time breaking above there. But we do have a 4 hour candle. This is representing London, 2 a.m., 3 a.m., 4 a.m., 5 a.m. It did close above this red zone technically, okay? So I'm basing this zone off of the daily, but right now, 4 hour volume is showing me that it is still here. So what I'm going to do is I'm going to flip this zone green, representing the 4 hour candles, because you can see that that 4 hour candle has closed above. It's came down to retest, and it's still holding a wick and coming right back up. So this is going to be a big potential breakout to the upside for gold. And if we can break out of here, I'm sure that we can maybe grab 40 pips from 33 to 37. So what I want to do is, with this daily point of interest yellow line, I'm just going to bring it more up to where there's 4 hour right there, like bodies. See the wick, a body, a body, a body, a body. Now it's about 3,344.45 area. Okay, so that gives me more of a, if we can maybe continue to break out of here, maybe retest this, we might have enough 4 hour volume to backfill this, and then we get to that resistance. And if it wants to continue to break through, I would be targeting maybe 50% of that 4-hour candle on Friday at 2 a.m. But if it's got enough, it can get up to that next daily position right there, okay? But right now, I'm going to show you whether we're having a lot of resistance. See that wick, that wick, that wick, that wick. There's a body and a body and a wick. So I'm just going to make a red box so you can see this right there, okay? If I make that red, I'm showing you over a long time, since Tuesday 10 a.m., we came in there and they pushed it back down. We came in there again Tuesday at 6 p.m. These are 4-hour candles, mind you. Got rejected back down. We came in there again Tuesday at 10 p.m. Pushed back down. We came in there today and they pushed it back down. We came in there again just 2 hours ago, 90 minutes ago, and they're pushing it back down. Okay, so this is a big 4-hour block of resistance in the market that could, start signaling that it can't break anymore, that it's going to continue maybe pushing down with this downtrend, and then we are slowly coming back up, but it's failing to break. So next thing is maybe we'll come back down and then do something like this. Okay, could be staircases going up slowly and an elevator coming down like this. These were staircases going up and then the elevator came down. Staircases going up, elevator coming down. Like we can, here was some small staircases going up, that elevator came down. So we'll see if that's indeed going to happen. But in order to get that higher time frame buying pressure, we got to really consider breaking this 3334 area right around there. Okay, so that's how it looks on the 4-hour, right? It looks like it's consolidating. And then if we look on the hourly now, okay, now I can see the hourly picture. Now I can see exactly which hourly candles, specifically came in there. I can see that one Tuesday, 11 a.m. I can see we came in there Tuesday futures, 8 p.m., 9 p.m. See it's barcoding red, bearish, bullish, bearish, bullish. Again, we came in there right there, 5 a.m., and now they're bringing it right back down. Okay, do we have maybe like an hourly channel we can look at? Yeah, if I can go from the bottom here, and I'm going to place it, as accurate as I can get, and that's our hourly channel. Okay, so you can see that the hourly has been pushing down. It came back up, lower high. They pushed it back down. We're coming back up with, these are all lower highs. And maybe now it's time to break this 4-hour support and this trend and maybe break down there. And then we see gold coming back down. Okay. However, if the buyers can respect this green zone and continue to maybe trade up here, we could technically maybe break out of this red zone with some news and maybe start to trade back up into here. Okay. Where are some hourly points of interest? If we do break above this red zone, just bring your red zone backwards. And then you see the trading volume that was above there, right there. That's kind of like a shoulder where it came up, it pivoted back down, came back up. There's a wick there. Yes, it did break and close, but then we barcoded at that daily area. Then they brought it right back down. And then there's the shoulder again, and then they dropped it. So somewhere in here, I'm going to have an hourly point of interest right there, a white line to represent the hour at 3338. You see right there, when it came down, it was holding the white line as support. Elevator coming down, closed below. When it came back up, the white line was the resistance, back down. It came back up to the white line, they dropped it. Yes, this big 1-hour candle did close above, but you didn't get any breakthrough at that daily position. It barcoded bearish, bullish, bearish, and then they brought it right back down, closed it below. Look at when it retested, white line, rejected, impulse, rejected back down, rejected, 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 elevator come down, okay? So if we break through there, that could be about 40, 50 pips, then we're getting back up to that white line. So, risk management rules. If we can break that, then definitely we can maybe fill back up to that daily position up there, okay? And then if we go above that yield line, then just go to your hourly and start dissecting back over here. If you, and you do your own charting, right? Okay, so this is what we got going on now on the 4-hour and the hourly. To me, it's really choppy. Like if you want to trade this, you're more than welcome, but It's real choppy. It'll open up with news. Let's see what's going on now on the 5 minutes. Okay, so this is the 5 minutes now. And to me, the 5 minutes look rather choppy. Okay, coming up, back down, coming up, back down. Now you can see how many times it kind of traded in there. They pushed it back down. We came back up right now, lower high. They're pushing it right back down. Are we building like two bottoms now on the 5 minutes where I can see it came down to that daily position, trend line, coming back up. There's the neckline, pushing back down. This, in fact, is it the double bottom? Can we get a push back up, maybe close it back above here, or will it go straight up? Or are they just going to continue pushing this thing down and breaking? Okay, so right now we kind of walked into the development of a double bottom on the 5 minutes at a daily point of interest and at our hourly trend line. Okay, so this could be where it builds, but remember, we're still kind of trending down, right? It's coming still down like this. So you got to be kind of careful, okay? See how it came up? Did it come to that point of interest? They rejected it back down. Now it's a shooting star candle coming down. Okay, so it's still technically bearish, but let's see if it can build here. We're in that 4-hour demand block. We're building a 5-minute second bottom, but you know, there's still a lot of selling pressure pushing this thing down. Okay, so let's add an SST daily bar indicator so we know what our daily candle looks like. There was the opening price. We made a low of the day. When was the low of the day? Right over there. Low of the day, kind of in here where it was retested, and then we came back to the opening position. Then it pushed all the way back up to the highest point of the day. We see that right there, 5:55, just as before 6 a.m. Eastern, and we see now the rejection coming back down. So you see where we're in the 4-hour demand block. We're building a 5-minute double bottom, and we're near the opening price of where everything started. So if they protect the opening price, we should see the 5-minute second bottom develop. However, if they lose the opening price, we could see them break and start to trade back down in here, and we'll see if they grab more buyers down in here. Maybe we could possibly sell if it closes below there, retest this, maybe drop down, fill the lower wick to low of the day, and drop for a new low. Okay, so right now that was a shooting star candle that pushed all the way down and open ignited pushing, but we're still trading in that supporting area on the 5 minutes. Okay, adding some EMAs. I know it gets really busy when we add these things. There's the 9 EMA, we're still below it, and the 200 EMA, we're below it, and right now technically we have a death cross where the 9 EMA cross below the 200, which could signal continuation selling pressure to the downside. Okay, so that's what we got going on gold right now. And it is 7:45. So we have a new 15-minute candle opening up as well. Okay, so you see now the sellers are breaking. They took out that low. We took out that daily point of interest. Still a lot of time left on this candle, 3.5 minutes to go. So what I want to see is, will it technically close below this area? Will it just come down? Will it pick up a wick and come right back up? Okay, so far the second bottom did not hold. Okay, let's watch and see if they take out all the way at this low, because that's what built the higher low. 1, 2, 3, 4. You got 5 wicks right there from the lowest point of the day. That's what built that higher low. Will this wick in fact be another higher low in the market right there, or are they going to continue to break things down? So you see how it came down there. Okay, it's still above. It's above all of this. Okay, so look at the reaction coming down deep down into that 4-hour demand zone. Good reaction. Buyers are there. They protected that from breaking that low, So technically, it is a higher low. I know it's very bearish, but we got to speak technicals here. So it is coming right back up, trading right back in that zone. So let's see maybe if this candle can flip bullish again with a liquidity grab. Maybe that could ignite that second leg pushing back up. Or sellers are going to continue to push and close it down below here. And then we might get another bearish candle that wants to continue to fill this wick and drop, but we'll see if it's protected with another higher low. Okay, so welcome to the world of analyzing the charts. A lot of traders think you can make money without analyzing. You possibly can, but you still got to analyze. You still got to see what's going on. I would love to just trade and not analyze myself. But sometimes you don't have the luxury of doing that. You got to watch. You got to stay on the sidelines and see what's going on. Okay, so you see here now the selling pressure is continuing to come right back down. That was a beautiful candle, the way how it got rejected and came right back up there. But the sellers are still there, pushing it back down. We're going to close in 1 minute and 20 seconds now. Where will it close? Will it close all the way back down to the bottom? Then that would be sellers are still in full control. Will it close inside the green box here? Then it shows me that buyers are still interested and they're still here. Or will they flip this and close above here? That shows me that buyers are really strong. Okay. Or it could just close again right at that yellow daily point of interest. Then we got to continue to watch who is building. Okay, look at now how the buyers are bringing it right back into the close. Now we got 49 seconds to go. Okay, are they going to flip this candle bullish? From when it started, it opened, it's got a tiny wick, and then they had that there. It just flipped bullish. Now let's watch the last 30 seconds go into the close. Okay, I'm going to check my spreads just in case I look for a trade on this. Spreads are 0.4. Good spreads right now for myself on gold. Okay, so I'm watching this candle. Did they come down there, grab some liquidity? It's still in that double bottom 5-minute green block. Okay, 15 seconds go into the close. This could gain momentum and be an ignited candle and just start to come up and create that second leg, or it could possibly come down. Just watch right here. Here's the close. Will it engulf that previous bearish body? Okay, it's got a little wick on it, but closed right near the high. Yeah, I'm going to go in a scalp buy. It opened, ignited. If it needs to come back down into the green zone, it's probably developing with some depth of market down there. I'm going to place my stop loss just right below that previous low. I could go really tight with my stop loss and keep it below the green zone in about 50% of that wick right there if I really want to go tight. But I want to give it some room to maybe breathe, to develop, because this could be a 4-hour demand zone if it needs to pull back down in here. And then I'm looking to see if we can maybe just fill these wicks and trade into maybe 50% of that big bearish candle on the second leg up, if it does in fact get up there. So I'm in a buy. I'm going to test this out. I like that nice liquidity grab. It closed as a nice bullish pin bar. When it opened, it was bullish ignited. I took that pop of that wick, but still it didn't really pop to the upside. It got up there, but then still encountered some resistance. Sellers are still there. So now I got to see if the bottom of this depth of market, if the short-term buyers are in here supporting this move. Okay, if they're not, then I'll get my clue that they're not here. If the sellers continue to backfill that wick, and I don't want to be in the trade anymore, because if the buyers don't come in here, or like right here, or right here, then there's no more higher lows. I don't want to stay in the trade any longer, because then it breaks that and then could take out the low of the day and completely drop. So that's as much risk as I'm giving it. If the buyers don't show me they're here or here, then I don't want to be in the trade any longer. Okay, so I'm trying to move up with this second leg. Reasoning behind was that nice big grab and closing in the high. That's why I stepped in on the trade. I could have waited, but again, it was an ignited bullish candle filling the wick and popping. I normally trade that. In this situation, it's not working out right away. Sometimes when I take that, it's bullish ignited and it's already up here, and then I'm moving my stop loss. So, you gotta go with what you see. Okay. If you want to hum and haw and wait for it, yeah, you can wait for a possible pullback. But what happens sometimes when it's gone and it's all the way up there? Okay, so I'm basing this off of the previous body candle. Okay, and then the way how the next one opened and filled, and I just went with it. Okay, so sometimes it might come back down on you. Guys, welcome on YouTube. 230 viewers. Thank you, guys. We appreciate you guys. Help us get up to 200 likes today, and we'll do a live FOMC with you guys later today. You guys kind of missed it yesterday. There was only 180 likes. We were looking for 200. So we're giving you guys a bonus session to get it up there. Okay, so we're moving now up. Okay, and we have our EMAs to battle. There's our 200 and our 9 EMA. At 10 pips, we're up. It could be a wall right there. They could get a wick and drop it right back down on us. If we can break those EMAs, we're looking to fill maybe back up to those bodies of interest right there. That could be about 15 pips. More importantly, we're still trading in this green zone. Can we close above the green zone and maybe get an additional continuation on this? Or are the sellers going to bring this big body candle down? We have 90 seconds to go. It's a beautiful candle, in my opinion, as a scalp to grab 15 pips just like that. I could go to a break even right now. But if you want to follow this candle, again, it could come back down on us, but this is representing that second leg. What I told you on 5 minutes with a liquidity grab. Develop your playbook, guys. Develop your playbook. Like, this should be a mental trade in your head. Like, just watching what happened. We came down into that 4-hour demand. It created that higher low, which I placed that red line. And there we go, guys. That could be, 20 pips up there. Yeah, exactly. 22 pips, okay? I'm going to a break even on this candle. I'm up 20 plus pips, going to a break even. It's going to close in 30 seconds. So I'm at a break even now, up 20 pips. I might make a mistake by not taking any money out. I did that yesterday, but maybe this thing could technically go further or close near the high, pull back. I still got to determine where 50% control of the candle is. It could be now where the 200 and the 9 EMA. So if there is a pullback, maybe I get held there. But regardless, I'm at a break even. Okay. Worst case scenario is it's a break even, but maybe this is going to come down and, hurt me, but let's see. Maybe I might continue moving. I'm moving with the volume right now into the close. It's closing right near the high. Holy shit. That's a 25 pip candle right near the high. If it opens ignited, we have no wick above us. We could continue to pop. There's that red line that I placed 50% of that bearish candle. That's where it could drop and come down. If it does, we still have the support of our green zone. It is blue. All we got to do is just get above. There we go. Okay. I'm closing out 80% there. Just a little pop. I'm grabbing 80% now and leaving 20% running. Okay. That's 30 pips. Just on that second leg. Guys, it doesn't get any easier than that. In my opinion, it does not get any easier than that. We walked into that trade when we did our top-down analysis. Remember, we went from the daily, 4-hour, hourly, 5 minutes. We knew what this zone was. We saw that higher low liquidity grab, protecting the bottom of the day. Guys, what else can I say? We walked right into that trade, and I don't know how else to say it. Okay, there's now you got your double top right up there. Okay, so there's your W. We caught that second leg. I always say, guys, the second leg is the more powerful leg. Please, guys, take a snapshot of this with your camera or whatever it is, and put this in your playbook. There's the second bottom with a liquidity grab. Dave and I have been saying this for 6 years now. And so for some of you guys, it's not registering. But hopefully you guys are understanding this, okay? So I got 20% running. I'm still invested in the trade. Yeah, absolutely. I wanted to break out of this neckline, but I got to understand it's a neckline. It could come right up there and sellers could bring this thing right back down. Okay, so now we've got to watch. 3 more minutes to go. Can we break above here, get volume closing above so that we can flip this resistance into support? And then we got our double bottom breakout. Like, here's one bottom, the neckline, second leg came down. There was our liquidity grab. There's our second bottom that we're in right now. We broke for a new high. So can it break? Can we close above? Then we flip the red zone green, and maybe we can further come up to this area right here. Okay, guys, we're running 40 pips now. So please do something, whether you go to a break even, this is 45 pips with barely any drawdown. So when you're talking about you want a one-to-one, this is like, how much unrealized risk did we use? Nothing. Okay, so, and now we're moving 50 pips. So do something, guys, okay? This affects me when you don't do anything on these calls. Go to a break even. Take some money out of the markets. Hit the likes on YouTube. Just do something. Do something. Okay? You can't get greedy. We're driving into a big red block where the 5-minute candles came in there, and look at that big drop. The 5-minute candles came in there, look at that big drop. They came in there, look at the big drop. They came in there, look at the big drop. We're coming in there again, and I could say the same thing. We're coming in there, and then look at the big drop. Okay, so I grab money out of the markets. Okay, I don't know about you guys. If you want to continue to hold for the rest of the day, that's your decision. That's not what I'm doing. That's not part of my plan. My part of the plan is to get into the markets, make some money, and go back and finish my renovations in my house. Okay, so now we got to watch where this thing's going to close. And you got to see now, 5 minutes have, some structural areas. I would say right here, we have to, whether we like it or not, we got to place a line right there at 3-3-3-3. Okay, there is a body, a wick, a wick, a wick, a wick, a wick, a wick. Okay, so if it comes back, fills all the way up there, that could be about 60 pips. And so far, we're just running on 2 bars. Okay, so we created a short squeeze, but you see now we came up. It's getting rejected now. Let's see where the body will close. Guys, we have 255 viewers. We just walked into a 50-60 pip trade with minimal to zero drawdown. We're going to take a look at the likes, because if I'm very disappointed, man, then I'm giving up on YouTube. I swear I'm giving up. Okay, so there's only 137 likes. Apparently, I don't know how to please YouTube. I don't know. The charge costs you nothing, a like button. Apparently what we just did is not educational. It's not important to you guys. No one gives a shit. If that's how it is, then I swear, guys, I can't do this anymore. I got a lot going on in my life right now that this is a waste of time. Sorry, YouTube, but we do this for you. If there's no support from you guys, I'm like a shooting star candle. I was very bullish engulfed, and then you just created me into a shooting star, and I got nothing to hope for on YouTube anymore. There's a lot of other YouTube streamers out there, YouTube traders. You can learn plenty from them. I don't know what else to do here. Maybe I'm not young. Maybe I'm not that 20-year-old crazy streamer that's dancing around naked here and just going full port on all of the trades. And, maybe you guys like that exciting, but sorry, I have risk management when I trade. I'm a real trader. I'm not here to just gamble my money. If that's what you guys want, I'll show you guys. There's plenty of those guys. I watch them too. Just they're funny. Okay, but did we close above there? Did you guys even see what I did? I changed that red zone to green. It pulled back. See how we're holding? We filled our wick. We created a new higher high. So we've got a little bit of an uptrend. Like, we don't have a complete uptrend. We haven't reversed everything. We got to get above this red zone to maybe trigger the market to change sentiment and direction. But we are moving, but we're moving back in that red zone. So that's approximately 50 pips, I would say, just above 50, okay? So I'm just kind of waiting for maybe one more push. If it can come back to the high, get back 55, 60 pips. And then if I can, I'm going to take out another 10% of the trade because I got 20% still running. And then I want to finally leave it with 10% going, and whatever happens, happens. Dennis, you got an easy $100. Nice, man. Okay, and then am I surprised that there's a shooting star candle coming down from a big red zone? No, I'm not surprised. That's why I took out like 80%. Okay, this candle could come all the way back down, close bearish below here, and then start another leg coming down. Okay, but if the buyers now, remember this point of interest, that bearish candle where I placed that red line, we closed above it. Will that red line that was resistance turn to support now and continue to support this move and bring it back up? That's what we got to watch. 2 more minutes to go and we'll see where it closes. This is representing 8 a.m. because now it's a new hourly candle. Like there's guys on YouTube that don't trade live. They come after the fact and show you this setup and say, yeah, you should have done this. I hypothetically took a buy here. I can do that all day too and just make videos of hypothetical situations and get 100,000 subscribers on YouTube, no problem. But Dave and I are here every single day live with you guys. We show you how. We walked you through right into this trade. If you didn't learn anything about that, I don't know how else to teach. That was a live educational trade, live trade, walked you in it with a full top-down analysis. And if you don't learn from that, like I kind of broke it down. I wanted that second leg of the double bottom. I waited for that candle to break that daily low, take out the opening position. When they dropped it, this was a very bearish candle. You guys remember it coming down. And it could have been very bearish. If it closed down here, we could have been dropping and take out this low of the day. But you see how they protected it right there, guys. Even Zoom, guys, please. Like I get a lot of questions on this. See how it came. I just placed that red line. I look further back, see how it's higher than those. And those wicks are higher than our lowest point of the day. So technically, that's a higher low off the lowest point of the day. That's another higher low. And more importantly, it came into that 4-hour demand zone. Remember, we went daily, 4-hour, and then we went to hourly. And then when it came back up, when it closed right there, as soon as it opened, I'll admit it. So when it opened, it was bullish ignited. And as soon as it took out the wick, that's when I bought. Then it came down and I encountered that drawdown on that wick. Okay. But this is in my playbook. Okay. I take this trade 99.9% of the time. So I encountered 4.7 pips of drawdown to make 50, 60 pips. Okay. So when you look at your R&R on that trade now, it's not a 1-to-1 anymore. And then as soon as it started breaking for 20, 30 pips, take my stop loss and bring it up. Remember, I even told you guys, I'm giving it more room to breathe. I'm placing my stop loss below that wick. But I originally said you could get away with a really tight stop loss, just placing it right there. So you could have even had even better risk management. So hopefully, guys, I earned a like on YouTube for that breakdown. If you get value from our channel, hit the like. If you think Ron has nice hair, hit the likes. I'm just playing. Okay, so now what's going on? Now we encountered some consolidation. Are you guys surprised about consolidation at a neckline? I'm not, because I've seen this a million times play out. Okay, so we're consolidating. We're in a flag now where it's kind of consolidating right here. Is it going to continue to build and continue to break out? But it's a big red box up here for a reason. Okay, so we came in there nicely. It was a beautiful, nice intraday trade, scalp, whatever you want to call it, for 50 pips. But if we want continuation to get that 60, 70 and breakout, we're asking, look at the daily candle. We need to ask buyers to continue to fill up the daily wick, and then break out for the highest point of the day. Okay, we're asking for a lot. This is where the daily resistance is. It's there for a reason, right? So it could definitely come tumbling back down. But I see a higher low. We're still holding in here. If we can get some more volume closing above this green box, maybe we can build a nice flag and continue going up here and maybe squeezing some short sellers out of their short positions. I guarantee you all of these short sellers, their stop losses are right above the daily high. So if we can continue to come through here, we could possibly engage their pending orders, take them out, and cause a little bit of a squeeze. But it's not easy to do this. Thank you, Lukeman. News in 10 minutes, guys. Yep. Lukeman, sometimes when I talk too much, you guys get me right back on track. So thank you. I appreciate that. Lukeman, right over here, guys, we got ADP news coming out, non-farm employment change in 7 more minutes. Okay. So if we don't know what this is, open the detail. It's an estimated change in the number of employed people during the previous month, excluding the farming industry and government. Okay, actual greater than forecast is good. It's released monthly. What are the notes of this? This data provides an early look at employment growth, usually 2 days ahead of the government-released employment data. That's NFP on Friday. So this is released 2 days before. That is designed to mimic NFP. Okay, it's not the real NFP, but it's designed to mimic it. Maybe it can give us some hints as to what to expect on Friday morning. Why do we care? Job creation is an important leading indicator of consumer spending, which accounts for a majority of overall economic activity. Okay, ADP analyzes payroll data from more than 25 million workers to derive employment growth estimations. Okay, what does ADP stand for? Automatic data processing. Okay, we can see the history. Last July, previous was 29,000. They were forecasting a big increase to 99,000. Look at the disappointing numbers last month. Negative 33,000 was the actual numbers when they were forecasting almost 100,000. So that was really disappointing. So you see that negative 33,000, that's what is the previous, negative 33,000. Again, they're forecasting for a big increase at 77,000. So let's see if it is near 77, is it above 77, or is it going to be another shitty negative number? Okay, so that's what we got to watch for. Okay, so that's coming out in 5-6 minutes. And you see how we're pushing back down, okay? So personally, that's why I don't get greedy when I trade. Sometimes when I come on these live calls, I try and hold trades as long as I can with you guys at a break even if I get to a break even. Sometimes I piss away 20, 30, 40 pips of my own money on these live calls because I'm trying to hold trades longer and longer and longer, and then they come back down and hit break evens. But the reason why I come on these live calls is so you guys can learn lessons from me, okay? It's a lesson. If you guys need to learn through me, you see when I go up 50 pips sometimes and I want more and I want more and obviously we all want more in trading. Scalpers want more, intraday traders want more, swing traders want more, investors want more. Everybody wants more money in the markets, okay? But it's got to come to a point where you got to trade with a little bit of discipline and accept money, okay? And get it out of your head. If you take out money there and it continues to go up, who gives a shit? You just got money in your pocket. If we can do this more on a daily basis, our pockets are going to get bigger and bigger and bigger. Slowly, they're going to get bigger. You're not going to just get $1 million today. You're going to slowly make $20 today. Next day, another $20. Maybe the next day we make $40. All of a sudden, at the end of the week, we got $100. We never had $100. Now we can work with that $100. And maybe after 1 month, you'll have $1,000 that you compounded. And it's a game of percentages. And then maybe you might inherit some money. Maybe you win the lottery and now you got $100,000. Now you learned how to trade, and now you're trading with capital of $100,000. So now you're not making $20, $40 a day. You might be making $200 or $400 a day. Some traders can make $2,000 a day. But and then look at how it's coming all the way right back down. I have 20% running at a break even, and it's, it helps with my psychology. If it comes all the way right back down and it hits my break even at 20%, then I'm happy that I took out 80%. But you guys see, we came right into that red zone. I fucked up on this trade too. I should have taken out an additional 10% when we broke that high in there. That was my bad, my fault there. Normally, that's what I do. I take out my additional 10% and then I leave the 10 remaining. But this could come all the way right back down to where I entered. It could come all the way back down and try for a triple bottom at this green zone, or it could make a higher low. But do you guys see how it came up and coming right back down? You turn a real positive trade and it could be all for nothing. It's demoralizing. This could psychologically affect you for your next trade and affect the way how you move the rest of the day. So trading is very, guys, psychological. You know, it's like a baseball game. If you hit a nice double or triple and you don't cash in, you're giving momentum to the other team. You know, if you got bases loaded and you strike out, that's like the Blue Jays right now are shitting the bed against Baltimore. Baltimore is a shitty team, and they lost the 3-game, and they had a double. They played 2 games in one day yesterday, a doubleheader in that heat. So, but they got killed in that series. But we're going into news, guys. 2 minutes, and then we got that ADP news coming out. So let's learn from this trade. Let's move on, because there might be another trade coming up very soon. But we got news now, and I don't want to gamble with news. So I've got 20% with the break even. Maybe it may come back up. That's fantastic. But hopefully everyone is, safe with a break even at least. Guys, almost 300 viewers. Amazing. Thank you, guys. If you guys continue to like the stream, YouTube will get us in that algorithm. If there's any traders looking for live education, live trading, want to join a community, that's what we want to find. And we want to find people from all around the world. You know, we're focused in Canada and North America. We get a lot of them, but we want to branch out and get traders in Europe. We want to branch out and get traders in Asia. We want to branch out and get traders in Africa. We want to branch out and get traders in South America. We want to branch out and get traders in North Pole and South Pole. We want to get them in the Amazon, wherever they are. We want to find traders around the world. Okay. It's not just Canada and USA. Trading is global, but it's up to YouTube to recommend us to those who are looking for a free education. Dave and I are trying to find you guys, but it's up to you to help us find them. We're on a mission. Okay, so 30 seconds here. We go into the news. So what I'm going to do is I'm just going to tidy up my chart, guys. Okay, I'm 20% still in a buy. Closed out 80%, but let's watch this because now it's going to get busy. We got ADP news coming up in 20 seconds. 5 more minutes, we have COMEX market, and then at 8:30 we have some US red folders. So get ready. I'm possibly going to get stopped out of this trade, but at least it's a break even with 20%, and I scaled out. And now we got Trump talking. Oh man! So wow. Okay, get ready, guys. Here we go. Okay. Bearish ignited right there, dropped. I'll verbally let you know I'm still in this. Okay, but it's got that ignited head, bearish head, so it's going to definitely maybe try to come back down. But remember, we got some support here, and we've got daily point of interest. So it came down, picked up a wick with a candle flip. No, it didn't. It hasn't flipped yet. Still got that bearish head. So they're still coming down. So that's what you got to watch for candles to flip. It's still bearish. 104 positive, Trevor. Okay, so that's beats their estimate. That's good. So let's see, maybe they came down, grabbed some liquidity. Let's see if this candle can flip back up. It might be a bullish move. I might take an additional buy on this. Just waiting. So see how it flipped, coming back down. Let's see if it can come back up. Very positive. Okay, so again, just looking at the news real quick, right over here, what do we mean by that? So remember, negative 23,033, they revised it. 77 was the forecast, look, 104. So beat, great, fantastic, good for US dollar. So now we got some consolidation, but we're at a supporting area. So yes, it could sell down, but let's see if it gets some support. You don't have to trade this candle right away, but let's just follow and see, okay? Good for the dollar. Yes, Sonia, not for gold, but sometimes it doesn't, it's not always correlated like that. You know, maybe initially right now it's good for US dollar, but it could find resistance and come back down while gold is finding some support here in the 4-hour. And then it could find a nice bullish move back up. But you are absolutely correct. It's bad for gold, good for US dollar. So let's see if it continues to come down on gold, if it's still bearish. And let's see if we close below this daily point of interest or this block. I still got the 20% running. I think I'm going to get stopped out very soon here. I'll verbally let you guys know. My broker is a little bit different than this one on TradingView. Sorry, let me get rid of this. Okay, there it is. Now I'm stopped out. Okay, so that 20% that I had running at break even is out. I'm happy, thankful, I'm blessed that I took out 80%, because if I didn't take out anything, I would have pissed away an entire 50 plus pips of profit. Okay, so get in the habit, guys. You know, we just filled right back up to the neckline and we broke out a little bit, but we got a bigger red zone up there. Now we got this leg coming back down. We just had the ADP news. So we have also COMEX market opening up in 2 minutes. Guys, it's going to get wild. Tony, let's go Orioles. I know you're from Baltimore, but man, they killed my Blue Jays there. Okay, now we see maybe an M pattern now. Okay, so that was one top. There's our neckline. We had that impulse break. Okay, so they already took out the low. Remember, we bought off of that candle. Then that was our buy, where hopefully we grab some money and we did proper risk management. And now there's the second top maybe coming down, back down to here. So that's a technical M pattern. But will it break? Will it close below this? What, can we flip that green zone red? Then we continue maybe with some selling pressure going into COMEX? Or is COMEX going to fake out the market thinking that they just released ADP? It was good. Gold needs to drop. They could fake it out and bring it right back up and grab more liquidity. So let's trade smart, guys. This is not the time to just take impulse trades. If you do, you're trading with impulse with volatile exchanges opening up and big news coming up. So that's up to you if you want to trade like that. However, if you want to stay patient, disciplined, watch what's going on, then stick with me. We're going to wait for bodies to close, and we're going to see where they close, how they close, and the reaction from the buyers and the sellers. The news is coming through. We're getting the news. But Donald Trump is still talking. What is he talking about now? We have a massive trade deficit with India. Again, he's talking about these trade deficits with all these countries. Trump imposes 25% tariff plus a penalty on goods from India. He better not touch the curry chicken or butter chicken. If he plays around with chicken tandoori, I'm going to go after Mr. Trump and, protest. He better not touch Indian cuisine. No way. It's too good. It's too good. If Canada better not impose, that's what I eat every single day. Okay, here we go. COMEX market open. We came in that little green zone, higher low, bullish ignited candle open. Okay, we can play our simple 50% rule. Get our cut tool. Okay, we're still below 50% there. We're still trading in this semi-green zone. We're still above that 5-minute block. We're still at our daily point of interest. We're still at the opening price of gold, still holding today. Okay, and US dollar is really strong. It's off the charts right now, and gold is going up. So you gotta understand what I'm saying. It's not always correlated, but let's just see. Maybe will it come up and then they slam it back down. Danny, I was just in Brampton last weekend. That's where I had to go get all my quartz and my tiles from the supplier in Brampton. There was some good Indian cuisine there in Brampton. I was the only white guy in Brampton. They were looking at me like, who is this man over here with this majestic hair? I was the only white person in all of Brampton. It was great. I love them. They love me too. Tuzma, what's my favorite Indian? Oh, I love chicken tandoori. I love chicken biryani, tikka masala, onion bhaji, samosa shot. I can list everything here. Oh, korma, chicken korma, amazing. The garlic naan bread, unbelievable. I want to get a tandoor. I was asking if I can put a tandoor next to my barbecue. Okay, guys, we got to get focused here. Okay, now we're getting a little bit of a retracement on that US, on DXY. So you see, still see how we're still building, okay? So we're still kind of consolidating here, but we still have 8:30 coming up, okay? So lots going on. Like I told you guys, it's going to be a crazy busy day. 8:30, we still have, look, advanced GDP quarter over quarter in the US. So we got GDP, gross domestic product numbers coming out in the US. So lots and lots of news, okay? We're still kind of just trading in this block. Nothing really broke down, but just pay attention to the opening position of gold today, right here on the daily bar indicator, 3325. We're still holding it, okay? So it's like right here. Okay, so nothing has really broke down yet. That's a higher low, still building. Will this be a bullish engulfing candle coming back up? Okay. Okay, so good move. Okay, so it came right back down to where originally we bought. So if I kept my stop loss just a little bit lower and I didn't go to a break even, I could have possibly still been in this trade right now. But always risk management at the end of the day is always good. So I never fault myself for using proper risk management. You know, why would I be negative on myself if I use proper risk management? Okay, so we got this nice big bullish candle coming back up, closing at 90 seconds. Are we going to close back above this zone? And are we going to squeeze out of here? Maybe those ADP numbers were just short-lived. It was nice, but remember, it's not NFP. They're nice. It's a precursor or to mimic what is going to happen in NFP. The market saw it. Dollar rose rather quickly, and now it's retracing back. But there's more demand for gold right now, okay? Because we're in that 4-hour demand zone, right? So put the pieces of the puzzle together, guys, okay? The ADP caused maybe moving in, that move coming down, but now the news was released. It was good, but let's continue trading with gold now. Okay, so gold is still holding strong. Okay, it's coming back up here, came through, that's still lower high. Where will we close? Can we close above? Are we closing below? Are we going to retrace back? Can we get our cut line and figure out where 50% of this bullish candle is when it closes in the next 20 seconds? Okay, maybe we can catch maybe a pullback buy on it, or we'll see if it continues to hold. Check your spreads too, guys. When there's news, your spreads fluctuate. Check your spreads as well. Get in the habit of doing this. You see my spread now? It's at 2. When I took that first buy, it was at 0.4. Now my spread is at 2. So even like, wow, yeah, it's jumping from 1.5, 2, back down to 1. Okay, so we failed to close above that neckline again. So off of that rejection, sellers have opened it up and pushing it right back down. Okay, so you know, like, let's see now. Will it get some support back down in here and come back up? Or is the sellers going to continue to push this thing down? And we're moving into US GDP red folder news as well. And we're still kind of in this consolidated zone. So let's just continue to watch. Unless you want to go in a buy or sell, that's up to you. But just use proper risk management because it could get volatile in the next 5 minutes, okay? Trevor, we'll get to NASDAQ and US 30 around 8:45, 10 to 9, okay? No worries. Okay, so you see now, we came all the way back down bearish, okay? Back down to that parallel hourly trend line, down to our opening price of gold today, to that daily point of interest. We're in this 4-hour demand zone. It's got a wick coming back up, but we have this bearish engulfing candle. So maybe we're going to break and maybe we're going to have to sell down with this. Okay, US dollars recovered and continuing to push up. Okay, so it does really like those job numbers. But now we have another one. See, that's why it's hard to trade as a scalper or intraday trader when you got multiple folders coming in. Okay, so in 3 minutes we have GDP news. So see how it came again, down all the way down there, higher low, coming all the way right back up. So it kind of flipped that big bearish engulfing candle, okay, going into GDP news, okay? But we're still kind of inside here. I know you could have either took a sell and you could have either took a buy, but still, I don't see any buyers closing above here. I don't see any sellers closing below here. So it's still in this accumulation phase. We know that gold's not going to sit in this block all day here. It's eventually going to make a move. But what is everyone's predictions? Option one, are you guys bullish on gold? Option one is bullish. Or are you guys, with the news coming in, do you guys think we're going to move back down bearish? Okay, so let's just recap. So far, we have had good ADP numbers, exceptional ADP numbers. From negative 33,000, they revised it, 23,000. Their forecast was 77,000. It came out 104. So job-wise, fantastic. But now we got GDP. GDP is gross domestic product. Advanced. These are advanced numbers. How this is like Donald Trump, his assignment. How has Trump and the administration in the U.S. been doing on GDP, gross domestic product? He's been placing tariffs around the world. Is that going to help GDP in the U.S. or not help GDP in the U.S.? These are advanced numbers, not the finalized numbers. Okay, and we got 90 seconds. Wow, Trevor, you're in the Nasdaq buy from 23,350. You made 15% on a call. So sit on your hands. Yes, Trevor, you can sit on your hands for a couple weeks now. Congratulations, man. That's big. You've earned yourself a day off. 232 likes, Moika. Thank you, guys. I appreciate that. Guys, that means a lot to us, for real. There's almost 300 viewers and 230 likes. That's amazing. So for that, we will come back later this afternoon and we'll do a live FOMC at 1 p.m. So join us again this afternoon, but also join Dave on the Post New York. Sign up on SST and you get to trade with Dave. So if you miss a session with myself, there's Dave. We can have another session. You know, once I finally get all these renovations done, then we'll have some other sessions. We'll do some Londons, we'll do some Tokyos, we'll do some futures, we'll do some just security outlooks. We'll do some market analysis in the stock markets. We got a lot coming. It's also nice weather too. It's summertime, guys. So just give me one more month to get through August, and then September when the kids are back to school, we go back to normal scheduling programming. Here we go. Okay, we're barcoding right in the middle. Bullish, bearish, bullish. Still stuck inside here. Let me just clean up these charts. So you see we're still inside here. You know, buyers are buying, sellers are selling. A little bit of accumulation. Someone's going to get squeezed out of here. But let's look for, are they coming down, going to fake out the market down here? So now, wow, big, good numbers coming out. Guys, we could look for gold to sell. Okay, so get ready. This could be an impulse break, but maybe we can scale down to the 1 minute candles. Okay, so these are 1 minutes now. Okay, so just watching this 1 minute candle. Okay, this is going to close in 10 seconds. This is the first 1 minute of news. I'll take a look at the news numbers as soon as this 1 minute candle closes. Here's the close. Okay, opening bullish. It might impulsively break below here or come back up bullish. Let's just see the GDP numbers. Advanced GDP, okay, from there 2.5, good, 3%. And the price index was a little bit underneath the forecast, but still good. Good numbers coming out from the advanced GDP. So good for the US dollar across the board on everything. Okay, so we could possibly look to maybe even impulse sell this. Okay, but I'm going to watch the 1 minute candle officially close. Okay, here's the 1 minute candle. Going to break here. Let's see this. Okay, so that could be that impulse trade that I was talking about. It's going to close in 14 seconds. Okay, I'm going to assume it's going to close below here. So I'm going green to red ahead of time. Okay, did it take out this low? Yes, it did. Okay, so let's watch how it's going to open. blue, watch if it gets a quick little retest, pullback, rejection. Okay, will it come up to about 50% of that bearish 1 minute candle? It's coming up bullish ignited, just got rejected. There it could flip. Oh man, I'm in a sell, but I didn't get that totally. I'm in a sell, and I'm looking to see if this news now can take out the lowest point of the day. I'm in a sell. I'm gonna place my stop loss kind of above that red zone. I'm gonna go now back to my 5 minutes and watch and see if the 5 minutes can continue to come down and fill down in there. Sorry, guys, that was a quick 1 minute entry. I'm just following that 1 minute candle, but I'm gonna see if we can continue coming down with that volume. I want to see if we can take out that lowest point of the day, that purple line. If we do take that out, then we're looking to maybe trade at that point of interest right down there, 3,320. There's a body right down there, and those wicks just right below it. Okay, so following this 5 minute volume, closing in 1 minute 50 seconds. Wow, like the US dollar is really bullish, guys. Really bullish. Okay, so we should see maybe a break of the low of the day, but it's hard to break lows of the day. It's not easy. Holy, the 99 and a quarter is the DXY right now, pumping. Okay, so this is gonna hurt if I get stopped out watching the US dollar pump, because next candle could, potentially continue to come back down. But let's see if we can get some closing volume just below this red zone first. It would be really nice if we can get closing volume below this wick, but there is buyers bringing it back up. Shit, I got stopped out there. Yeah. Gold is way too volatile right now. Okay, so I got to follow this 5 minute volume now. 40 seconds going to close. I got stopped out on when it just came right back up. I had a tight stop on it, but I'll follow the next bar. Oh, now it's going to come down. Fuck. Sorry guys for that French. See, they clear the board. They took me out. It's clearing the last bit of traders in there, taking the liquidity, and now they go down. So I had a tight stop on it. My bias is bearish. Okay, but the great ADP numbers, good GDP numbers, is just now following it. Remember what I said, if we can close below that red box, that's perfect. If you're still in the trade, guys, I just had a really tight stop. If it closes below this wick, it did. Okay, so it's opening bearish. Okay, if it comes back up, we could be looking for a possible retest sell of this red block if it comes back up there. And then you got your 9 EMA and your 200 EMA coming down. We're below that hourly trend line, We're below the daily point of interest. We've already broken down. Oh my goodness. Like this could break this low of the day and it could really drop. But if we're waiting for, maybe a pullback to sell there and then come down, then unfortunately you got to wait for a retest to maybe come back up there. It's crazy volatile right now. Oh my God, the US dollar is off my chart right now. Yeah, right over here, guys, like the US dollar right here. Look at it. Look at it going the US dollar, okay? So you would think that gold needs to sell, okay? That's why I'm waiting for maybe a possible pullback to sell here. I was already in that sell, but damn, that 1 minute candle right there, that one. You see right there where it came up? That's where I got stopped out. So that's where I'm telling you guys, they took out my liquidity, they stop hunted up there, and then now they're taking it down. So sometimes when that happens, it happens, guys. Still in, you had a larger stop, Jay. That's cool. That's cool. That's good, But now, Jay, let's follow this, okay? So we have not came back up for the retest yet. Did they break down? Okay, those are those equal bottom lows. Let's see if they can break for the new lower low. Because, when I'm in a sell and I see those equal bottom lows, I tell you guys, I'm about to throw up. because they're holding the market from breaking that daily low right there, that purple line. They're still holding it. All you need is a new low. Just break down that wick. Come on. Like right there. If they don't see, they're holding it. They're protecting the low of the day currently, even with a strong US dollar, okay? So that's just to show you how these are not 100% directly correlated, okay? There's a lot of 4-hour buyers that want to buy gold because maybe they're accumulating for FOMC, for example, right? You and I, we're just scalping right now lower time frames. But think bigger, guys. Think that we're in a 4-hour block. I know that it's great numbers for the US dollar, but maybe they're accumulating at a 4-hour demand, anticipating some results from today, later this afternoon for the FOMC, okay? So you got to think like that too. I know us intraday traders and scalpers want to break this low of the day and continue dropping, but you got to understand that there's buyers continuing to buy up here regardless of the news. You know, they're just adding positions, okay? So we got to continue to follow this volume. Minute 40, still having a difficult time breaking, but it's kind of like a spin top candle. Could trade down here. Again, if it closes with bearish volume down here, next bar could open and break that, okay? So we want to keep volume below this wick, but if we have to come back up and retest this, that could be where bigger sellers are and more offers are in the market. To come up there, get more offers, then it's got the bigger move to come down, okay? So that's what I'm waiting for. I'm waiting for maybe a possible retest in here. And we got 60 more seconds. So you still see how those sellers are still absorbing all those buyers. When they came back down, buyers are still asking to trade up here. So now we got a bullish spin top candle. This is that indecision candles, okay? They come up, they go down, they come up, they go down, they come up, and they go down. We could be creating a bear flag down here in order to continue to move down, okay? And we're going to stick with gold for about 5-10 more minutes, and then we're going to move to look at NASDAQ and US 30 and get ourselves situated for Wall Street, okay? But let's keep an eye on this too. I'm going to place an alert here at that yellow line, just in case if I'm on another chart, I want to get alerted if it comes up there. Okay, so here's the close now. Okay, so it did close as a bullish pin bar. We did close a volume, a little bit of bullish volume above that wick right there. Okay, so it could maybe make its way slowly back up to here, or sellers could just shut it down here and bring it down. But notice that equal bottom lows, okay, so kind of held the market. There it came down again, got a higher low coming back up. So will it hold? It's got that higher low still holding. Okay, so we still have that bearish kind of volume. You know, it's got that higher low, higher equal bottom lows, lowest point of the day, still holding, coming back up, coming down, coming up, coming down. So one more time, maybe if it comes down, this thing might have more move. Yeah, coming down. Okay, I'm gonna sell now. I'm gonna go in with a continuation sell. I was waiting as much as I could to get in the red box, but I might not get it. So I'm entering a sell now on this bar. This is going to be my final trade of gold for now, and then we're going to do some US indices. So just kind of placing my stop just above the red zone, above that daily point of interest. I wanted to get the sell position if it was going to come, but maybe it's just going to consolidate here, and maybe it's going to make its next way down without even coming up there. So like right here is kind of maybe the consolidated zone. Whoops, I wanted to go neutral on that. Shit. Okay. Okay, so I'm in a sell. It's in drawdown right now. As that candle was coming down, that's where I got in. I was hoping to get into the sell in here. As you see, just a little bit of impatience on my part. And now you can see how impatience can maybe possibly cost me here. Now it's actually traded in there. Okay, so traded in there right to that daily point of interest, that yellow line, got a rejection. Okay, so now there is sellers there, but we do have strong buyers. Trump, second quarter GDP way better than expected. Too late, must now lower the rate. Okay, so maybe these GDP numbers, maybe Powell during FOMC may change the pause to a decrease. I don't know. Okay, so there's the rejection. As much as I wanted to sell right there, feel like that arrow. Okay, so technically, if I sold up there at that yellow line, my stop loss would be maybe above this green zone if I got that sell. I'm in down here, so my stop loss is up here. Okay, but we do have sellers still in the market, coming back down. But do you see how I went in impulsively? If I waited up there, I would have, sniped that wick and had zero drawdown right now in the trade. Okay, so now it's coming right back down to my entry point down in here. But this candle is going to close in less than 90 seconds. So let's just see where it will close. Can we get that shooting star candle coming down, taking out those equal bottom lows and move? So you see the retest, guys. That was my bad. I went in a little impulsively too early. Had you got that impulse or that retest, you would be in quite a bit of profit right now with zero drawdown. Like right there, that yellow line. Exactly right there. You'd be up 25 pips right now. Okay. So it's just, I thought maybe it was going to flag down here and then continue to drop down. But, if you just waited a little longer, there it was. Okay. Now let's see if we can break those equal bottom lows, maybe close with some volume below there. We've got a beautiful shooting star shit that I wanted. Like, see that arrow coming up and then boom, man. Trading is hard, guys. It's very, very difficult. But if you can teach yourself patience to wait and wait and wait, you can possibly nail some entries. But now, like, guys, let's not get too excited. It still has not broke that lows right there. Man, holy shit, are they ever protecting this low of the day on gold? Even with all of this positive news coming out on the US dollar, and look at how it's protected, that they're not breaking it as of yet. There's the close of the candle. We did close as a bearish spin top. So you remember we opened where I took the sell down. It came up really, really strong and bullish right up to the retest point. Came back down. We held a little bit of volume. We have an ignited bearish bar. These are those bars that we need to capitalize on and just bid down in here at the lowest point of the day because there's a lot of buyers in here. We could cause a nice little meltdown down in here. Man, we got to hold on to this ignited head. If we don't, get ready. It's flipping back up, okay? Back in that consolidated zone. I hate when this happens. Oh man, I absolutely hate when this happens. When you get that nice ignited bar and it just has to break down like 5 points to take out a new low, and then you see a wick equal, then you can tell that there's a lot of support down here accumulating, and they're protecting this low of the day with all of the good US news and the positive move on the US dollar. So you would think that this needs to break down, but there's a lot of buyers there. The market knows that there's a lot of sellers here and stop losses are above here. So maybe they need to come back up, get pending orders, hit all short traders out of their position, take them out, and then drop it down. That could be the situation. But regardless, just don't over leverage when you're trading. That's it. Let the trades play out, but don't over leverage. 15-minute chart is ugly. Yeah, it's not too ugly. It's not bad. Breaking down, the 5-minute is the ugly one right here. I don't know, guys, if they're going to break the low of the day. It might hold for now. And then it might break later on. Like it could break during 9 a.m. or Wall Street, okay? So, but right now, it looks like they're holding it. Unless we can break. Come on. Come on, get down here. Okay, that's good. We broke, but now we created the new lower low. So now we got to follow the volume because, just even down here by the lowest point of the day, there's more buyers down there. Okay. So we got to follow this volume. That's great that we did that. We need to create lower lows and lower highs in order to keep pushing down, but it's now approaching that purple line. Okay. It's a low of the day for a reason. Okay, so now let's just follow this bearish volume. Can we close with bearish volume below this red line? Then maybe on our next bar, we can continue to work our way down. Could this bearish bar come all the way down and close below that purple line? That would be fantastic if it can do that. But we're kind of asking for a lot for it to do that. But what we need it to do is officially close below those wicks. Okay, if we can get down there, that's a bonus. Boom. Okay, there we go. Guys, I didn't measure this, but this is pips, okay? This is 30 pips. I'm going to a break even, and I'm taking out 80% down at that red line, 35 pips. I'm taking out 80% there. There we go. Fuck, I entered that one too early. I wanted to nail that wick and snipe that shit. My bad, but it still worked out good. Guys, that's 42 pips. 42, 420, smoke a joint right there. I took out 80% on that drop. I'm not getting greedy, and I'm at break even again for 20%. Okay, sorry about that early entry, guys. I apologize. I thought maybe I was just one candle too early. I thought it was going to break down there when it was coming, and we were going to get this bearish bar on at 840, or sorry, at 835, 840. My bad. I apologize, guys. But did you see how I placed my stop loss above the red zone and I was still safe? Because this is a block in the market. The yellow line is our daily point of interest, 3,325, and there's exactly what it hit. Okay, so you can be very technical in trading, but it all started with the top-down analysis. Okay, so great, guys. So I'm happy we broke the low of the day. That's fantastic. But when you break the low of the day, you could engage a lot of buyers coming right back up. So please don't get greedy. What I did was I took out 80% again as soon as we hit that red line because I was targeting that red line from over here. Now you see where we dropped. That wick is relative to where these wicks are right there. Okay, so let's look below here. Let's look at some structure. Is there any fair value gaps below these wicks? Kind of right here. You see where they're kind of not fair value gaps, but I'm just looking where it created structure. Right there was start of a bullish leg, right, on the 5 minutes. Coming in again, that was the second bottom. That's where they grabbed the liquidity below there, take up that leg. Then it came right back down. It broke even further into our bigger green demand zone here, came back up and held. So this green box, I'm stretching it into the future. If it sells down in there, coming down, okay, here it comes down. Okay, watch, guys. If it comes right into this green zone, holy shit, okay? That green zone could be about 75 pips. Yeah, I got 20% running. Holy, come on down. I'm going to take out an additional 10% down here too. Holy shit. Guys, it could just walk right into our green box. So I only have 10% running. Okay, hit the likes on YouTube if you guys grab some pips here and you guys are having some fun with us. Dennis, you got that? Good. Look we closed below the purple line, ignited bearish bar, open, did not even come back up to retest anything. Pushed down, broke a new low, but we're coming maybe down to that green zone. Got to respect that zone, okay? Holy. Just took a while to break down. But there we go. And then if it comes down here, that's my full TP. I'm going to close out my additional 10%. And then we're moving on to indices because it's 10 to 9. Okay. I'm just going to close out my remaining 10% just so I can psychologically get out of this trade and we can focus on indices. But there we go. So I'm out of this. I took out 80% on the initial drop, another 10%, and I got another 10% coming right down into that green block. Okay. And that's it. That's a 75 pip move from right here. But the retest, oh my God, guys, if there's any lessons on these calls or anything, that retest. Remember, I went in just a tad bit early. Look at the arrow, how I had coming back up, retesting this, then dropping. That was my mistake. So this is how I learn from my mistakes, what I could have done. But also, what happens if, I hit that right there where I sold, and then we had these two big bars, and I'm still waiting for that retest, and then that happens. That happens a lot to me too. So, but that's why just stop loss placement is the next piece of the puzzle. Okay, so we just came down into this green zone where you see where it bounced right there. If it wants to continue to drop, we have a yellow line down there. The yellow line is the daily point of interest, 3313. If it gets all the way down there, guys, you're walking into a daily point of interest and a bigger, deeper demand zone. Okay, so yes, it's beautiful, but guys, all I'm saying is please grab some money out of the markets. Okay, it just helps me on these calls mentally to understand that you guys made some money, you guys manage your risk, and we're all good. We're good to go. Okay, it helps me go on to the next stuff that we got to do. Okay, I don't want to hear anyone not going to a break even on an 80 pip trade. That's just reckless trading. And then if you do that, it's on you. There's nothing that SST can do to help you. You need to help yourself if you don't know how to go to a break even right now, or take some money out of the market. Because if you don't, I don't know what to tell you guys. Okay, that's 95 pips. And if it comes all the way down to that daily, I'm out of my position. Like I got everything out, but if you're still holding, God bless. Wow, that could be 100 pip. Oh my God. What are we having for breakfast, guys? Steak, lobster? What are we eating today? I'm going to get a nice Nicaragua bold cigar for breakfast with some steak, lobster, some escargot, ribeye, Sherry. Yeah. All of them. Okay, we're eating today. We're feasting. We break bread together. Beautiful, guys. That's 100 pips from, look, this is a yellow fill. Yellow. Look at the wick, the retest. 3325, yellow daily point of interest, all the way down to our next yellow daily point of interest for 100 pips. That's as clean as it gets. My goodness, guys. If you enjoyed that and you got some pips out of that, hit the likes on YouTube. We're at 323 viewers because now we're moving on to NASDAQ and US 30. Another bearish ignited candle breaking. My goodness, guys. Wow. Okay. I feel like a fool now taking money out of the markets when this happens. But, oh my God. It took out this low. It took out that low. Guys, the only other part where the market was saved is right here. Wow. 3308. My goodness. Holy. I don't even think we need to show up for FOMC today. Hopefully we hit our daily goals, but we will come back for FOMC because we're crazy traders. But now just go through your fundamentals. Are we below this green zone? Yes. Go red. If it comes back to retest, you might continue pushing down with this. Oh my goodness, guys. Look at how it flipped the daily candle coming all the way down. Okay, I got to move off of this. This was fantastic, guys. We're moving into 9 a.m. We got work to do because we got to do NASDAQ, Dow Jones. We got to go take a piss. We got to have a break, and we got to, just continue moving. What I do now is when I get out of the trade, I clean up the charts a little bit. My cut line moves to 50% of this bearish candle. We're below that block. I can get rid of this red line. We broke those tweezer triple bottom low wicks. We broke it, and boom, we caused a squeeze in the market like you wouldn't believe. So amazing. I don't have time to review this whole trade setup. The buy, you guys remember that leg? We had that buy up, and then it came right back down. Scalper's paradise today. Enjoy it, guys. But let's move on, okay? So hit the likes, guys. If you got, two good bangers, Father Doug, we appreciate you praying for us and hitting these bangers. If, Father Doug, you can give another blessing to the SST community for some good volume leading into Wall Street with NASDAQ and Miss Jones. If you can give us a blessing, we do appreciate it. Man. Okay, so here we go, guys. Let's move over. Okay, so I'm going to do this analysis, and yes, we are moving into 9 a.m., but we're gearing ourselves towards Wall Street. Okay, let's start off with US 30. Look at how it looks on the 5 minutes. Rather ugly right now. Okay, but maybe we'll get better volume. Okay, so we can see news how it kind of. But let's get the overall picture. Let's start off with the daily. Okay, let's see the bird's eye view above us. What's happening? Double top all-time high. Right here, red block, continue into the future. We're below it. Okay, so it could be triple top. Some people say 4 tops. This could be considered 1 top. This could be considered 2 tops. This could be considered 3rd top. This is the 4th top. Whatever you want to consider it, 1 top, 2 tops, 3 tops, 5 tops, 10 tops, doesn't matter. We're just below the all-time high supply zone, okay? Now, when we figure out the red zone, stretch it into the future, okay? Now, can we do the opposite? Can we find a nice little green zone that we could maybe possibly trade into? Right here, there was some support right over here. If I make it green, I'll show you how it came in. The wick broke, volume stayed above. Wick came in, broke, volume stayed above. Came back down, see how it retested, and then came back up. So it was holding for support for a couple weeks. Then the sellers broke through it. As soon as they break through it, you make it red. Stretch it into the future. So this is red, 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 red. And then as soon as that bullish candle closed above it, it's continuing to be green. And now I can see, yes, they did close below it, right? What day and time was it? I always look at that. That was a Tuesday, July 15. They broke it down. It did continue to come down a little lower, but then it came right back up, closed in there, and we got the volume back in there. We're still respecting this green zone, so stretch that green zone into the future. This is the flag pattern we're in. It's a bullish flag pattern, okay? We have this big rally that came up. Here's our bullish flag. It's got a high probability it will continue to break out into the future. However, that's all-time high. So it's already built an all-time high, and now we're pushing down from the all-time high. So it could come all the way back down and then maybe find another bottom in this green zone. Or if it closes below here, we could do something like gold just did. Fill that wick, and then we'll have US 30 dropping all the way down in here, okay? If it breaks down, maybe next week, who knows, maybe next month, whenever. But now let's just kind of go through with what's going on so far. So I see that there's a point of interest in between this red and this green zone. Where? Right here. Why? Because there's a wick, a body, a wick, a body closed above. Look at the wick uses it as support. Yesterday was a close that we have to pay particular attention to, and today's open, okay? Because it's FOMC day today too, so we got to pay attention to this. Another thing that I look at is, okay, there's the all-time high for US 30. Look at the number where I just placed it. 45,150.00. Okay, it's like a price tag, but it actually technically was 45,155 and 39 cents in the book. Okay, but you know, like gold's all-time high, 3,500 on the dot. Look at US 30's all-time high, 45,150. When you talk about psychology, that's as psychological as it gets. Okay, now let's just feed off of what happened the day of that all-time high break. Very, very bullish to start off this week, Monday, and since then, they slammed it down. They came all the way back down. Look at the low wick. This is a point of interest. I have a body closing and a body opening and a retest. We have to place a point of interest line here, okay? Whether you like to or not, just try and do it, okay? And then see how volume reacts at this area, okay? So, continuing, we came... then the next day, it came off of there, off of that all-time high, and we opened the next day, Tuesday, yesterday, bullish, where it came up bullish, bullish, bullish. But you see, like I have another point of interest right here. These 3 bodies. Got a body, a body, a body. So I see impulse came back up, back down. A couple of impulse, back down. All-time high break, they slammed it down. We came up yesterday there again too. But the buyers, more sellers are present. They pushed it all the way back down. How can I tell that there's more sellers? Look at the bar. This was bearish, 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 where it filled the previous day's low. And then it continued bearish, bearish, bearish. We filled last Friday's low, and it created a new lower low yesterday, okay? So right here where I have this yellow line based at this neckline, now I'm going to manipulate it and put it now right exactly where we closed yesterday. And I noticed today's opening is a bullish ignited open, just as if this is a 5-minute candle, same shit, but this is a daily bullish ignited open. Okay, so it's ironically also the lowest point of the day. So this is a purple line. Okay, so 44,000 give or take 622 is the lowest point of the day right there, and it's kind of that bullish ignited open. We have not sold off to fill yesterday's wick and continue to drop. So right now it's still strong. It's holding. It's bullish. It came up, it came up, it came up, and that's the highest point we got to today, right up there. It is lower than this yellow line, okay? And we got rejected, and it's pushing right back down. This is an inverted hammer. It's an upside down hammer. We're still holding that bullish volume, the ignited head, so it could technically come down here, refuel, fill back up and fill its wick, and then continue to break out to this yellow line, maybe break out even further. Now let's take it a step further. Yesterday was a big bearish candle. Let's grab the Fibonacci tool and go from the opening of yesterday to the closing of yesterday, and look at now, we can find exactly, there's 0.5. You see today's wick? The purple line is just below 50% of yesterday's. But what I'm going to do is I'm going to get a point of control going up to the 382, bringing it down to the 618 right there of the Fibonacci, and make it bearish red and stretch it into the future. Okay. And then when I'm done that, now I've got yesterday's point of control of bearish volume. Get rid of my Fibonacci. Now it's called Rananachi tool. So it used to, formerly known as Fibonacci, now it's the Rananachi tool, came up there, and you see we've got rejected. Are we going to come back up here? Like that could be, you know, like that retest on gold that we just took. That could be where the candle came up, retested, it's rejected, and if we lose this bullish volume going into FOMC, guess what? Could be a big drop on US 30, okay? So we're going to come back later on to see how everything is going. But right now we got to go with what we see. So for example, if we continue come up bullish and it comes up here and we go through this red zone, where are we going to go up to? I would say up to this point of control. From where did yesterday open and the previous day close? Right there. Maybe just give yourself a red line, 44,850. Nice psychological level. If it goes to the next level, you got the yellow line. If it keeps going up, you're going 50% in there. If it keeps going up, you're going to go to the all-time high. Okay, just take it point of interest to the next point of interest. Okay, but now, for example, what happens if we lose this bullish body? Like the sellers continue to absorb and we come down here. First thing is we got to break and fill yesterday's wick. So whether you like it or not, just draw a point of interest at yesterday's low just to let us know. If we do break, then we're driving into 50% of this bullish candle. How do I know that? Because I've been looking at candlesticks for 20 years now, and I can pretty much guarantee if we break that, it'll fill that wick and then drive into the point of control of that bullish candle. If the buyers are there, they'll kind of bring it right back up. If they lose that, then you're coming back down to right here, 44,400. I can continue to do this all the way down the depth of market until we get into right there, 50% of the green zone, and they hit it on July 22nd, and the buyers were there present, and this is the results of it. Since when it came in there, that's where we broke for the all-time high. Now we could retrace all the way back down. Okay, so when I look at now the overall daily pattern, do you guys see like the double top with the liquidity graph at the all-time high? Look at this. Okay, there's the one top. All this shit in this green box is the neckline. Coming back up, there's my double top. Okay, at the yellow line, technical double top with the all-time high liquidity grab. Okay, so look at now, it's an M coming down. So if we lose our daily bullish ignited bar, we're dropping today. I think today is going to be, if we don't hold this, going into FOMC or FOMC, they got a lot of room to drop US 30 and sell off the market, okay? That's just what I see right now. But we're still holding a bullish ignited candle. I could be completely wrong. If the buyers continue to hold this opening, they could continue to fill, and then maybe we're breaking out bullish with FOMC. It's all going to determine what's happening around here at 44,625. Okay, so that's just my daily analysis. Okay, but I'll give you a full breakdown. Now let's go into, remember what we did? We went into the 4 hour on gold. We can do the 4 hour on this one too. But look at the 4 hours. We're in a downtrend. 4 hours came down, lower low, came back up, lower high, go back down, lower low, coming back up, lower high. Maybe now you see how it's consolidating. This 4-hour candle is going to close in 52 minutes. Next one's going to start at 10 a.m. So if we continue push down, if you guys are 4-hour analysis, watch this 4-hour body. Is it going to close below this purple line? Because then we're losing that bullish ignited 4-hour candle that opened the market at 6 p.m. today. If we lose that, we've got a lot of room to continue to drop down in here. Look at where the big supporting area is. The big support 4-hour zone is right here. Guys, put a green zone right here. See how it was red here? Push down. Came back up, double top, red drop. Come back over here, close above, flip it green. And what was the results of it? Look. Retest, retest, push up. Draw this zone, continue into the future. Look, we came into it, back up, came into it, back up. The daily candle opened with a bullish ignited bar. So if we come back in here, is it going to gain support or are we losing this? So that's where we got 4-hour support in between 44,625 all the way down to, give or take, 44,585. Kind of that 50 pip zone. But right now, we've got 4-hour candles consolidating. It could be a bear flag and continue to go to the downside. However, it could be a double bottom too. It came down, one bottom. There's the neckline. Coming back down, like just same shit if this was 5-minute candles. Is it going to come down here, get a double bottom, come back up, break, close above? Then we got a bullish afternoon maybe going in FOMC? Or are we going to, sellers going to continue, break it down, push it down here, close below? We flip that zone red and then FOMC, market is dropping down. Okay, so that's as clear as it gets for US 30, guys. I don't know if I'll have this much time to do NASDAQ like this, but that's our 4-hour zone. So you see how I'm going from daily, 4-hour. I can now go to the 1-hour. See the 1-hour candles kind of consolidating. I can see the big moves now exactly. 9 a.m. was yesterday Wall Street. 10 a.m. continued advanced. 11 a.m. kind of noon came back up. But again, look at you kind of bought right back into 50% of that bearish candle. And look at the wick, point of control. They dropped it back down. However, we're holding good steady. Look how many times the 1-hour candles came in here, came in, held, back up. Can't break this daily high, back down. Hourly candles are technically making a higher low, in here. Point of interest that I'm going to watch on the hour is right here. I want to see, I'm going to place a white line here. I want to see if like the 5-minute candles, 15-minute candles start closing below this hourly support. That could trigger the sell push down. However, if we continue to keep volume above this hourly point of interest, we could have the next leg coming back up, testing the high of the day. Hourly candles are kind of consolidating in here as well. You can kind of look at this as this type of pattern where it came down, back up. Okay, are we coming back down for a double bottom? Right now it's kind of holding this. Will it come back up for a higher low test here? Or if the hourly is going to just dry down here, then we got that nice drop coming in. Okay, so let's go down to the lower time frames. 5 minutes. Okay, the 5 minutes are ugly. They're choppy. No real range right now. I don't know. Like here they were trading nicely where they were breaking down, came back up. That's nice trading volume. Bearish, bullish, bearish. Now it's a shit show. Okay, so let's avoid this shit show as much as we can. Let's just see if the 5-minute candles can continue to stay above or below this white line. I consider this entire area consolidation. And let's see at Wall Street what they do at the high of the day. Will they scoop liquidity up there, then slam the market down? Will it close above there bullish? We build off this and we break out bullish? Or are we attempting to come down and sell down with that 4-hour pressure, that daily pressure, and also the 5-minute pressure? If you look at the 5-minute pressure, right there, made a lower low, lower high. New lower low, lower high. Lower low, lower high. Lower low, that's a lower high. Now we're holding. It's building a little bit, but this still purple line is still lower than this, lower than that. But it's slowly building a little bit. We could definitely continue to sell this shit down. Okay. So right now, I wouldn't even know what to, if you ask me, Ron, buy or sell, I wouldn't even know what to tell you right now. This is too choppy. So what we do is we add our daily bar indicator. There it is. We know our opening price was bullish. When did it happen? Right over there. There's kind of 6 p.m. Eastern over there. Came up bullish. We hit the highs of the days a couple times up right up here. This was pre-London and just going into London. And so far we're coming down. But we still have this bullish body to contend with. Okay. Just some key points of interest on the 5 minutes are right here. That wick. that wick right there at 4:30 a.m. Eastern kind of saved the entire market from really breaking down into the green zone. We came down there at just at 810, and it's a higher low building off of that. Okay, so that's what I'm watching. Add some indicators if you want. You can add RSI, you can add EMA, you can add ABC, you can add whatever you want. Doesn't matter. Okay, we're below the 9, we're below the 200. It's just too choppy to make anything of this. You know, maybe if Wall Street is choppy, we don't trade Wall Street. We made some good trades on gold. Maybe then we'll come back in FOMC once the markets settle down. Maybe also with Dave in post New York, after New York settles down, might be some good trading opportunities in the post NY session. Okay, so what time is it? 9:13. Okay, I got to continue to go here, guys. That is US 30. We're going to keep US 30 over here on the left side of the chart. Let's just look at gold one more time. Holy shit. Okay, so gold, look. Retested red zone, back down. Retested red zone, back down. Coming back up here, lower highs, back down. Oh my goodness, okay? If I was still with gold, I possibly would have maybe continued selling those red zones. Okay, guys, that's 150 pips to the next daily yellow line. Wow, okay? And then below there, yeah, you can see where it could, 3305 right there. Oh my goodness, guys. Who's eating up on gold right now? Anyone got runners continuing? If anyone is holding full position, God bless you. If you are, you deserve this, okay? I can't do that, unfortunately. But Lady Stone, wow, congrats. Good for you. Amazing. Okay, let's do NASDAQ now. Like, look how choppy US 30 is. Please, guys, do not trade US 30 right now. If you are, take feeler trades. Listen to your unc, okay? You know, sometimes your unc can be funny. Your uncle can be funny. We have a good time. But your uncle is also there to look out for you guys. Don't trade this shit with don't go, guys, listen to me. Don't go standard sizing in this bullshit area. You're going to get faked out. You're going to struggle. You're going to get pissed off. And you're going to panic. Just stay small in here. Small, microsizing. If you need to feel out anything, buy the market makers a coffee. If you lose 30 pips, you lost $3. No big deal. We'll gain it back. But don't go in here trading this shit and lose $300 or $3,000. Okay? It will really affect you financially, emotionally, psychologically, mentally. All of those. All of the above. Don't be silly. Look at the 5-minute candles. They're disgusting. If this was just a normal trading session, I was trading by myself without you guys, I would go right back outside and enjoy the day. I wouldn't even entertain this to even trade because I know I'd get really frustrated. Okay, so let's see NASDAQ. Is NASDAQ trading a little cleaner? Let's take a look at it. Okay, gold was like, if I see this, I'll switch over and trade gold. Look how clean gold is trading. Like, you could just continue to sell pullbacks and you're making money, right? Because it's trending now. But right here, U.S. indices for U.S. 30, I'm saying, is a complete mess. And normally, U.S. 30 is my favorite security. But I got to be honest, it looks horrible right now. Okay, so let's take a look at NASDAQ. I'm going to do a quick top down. Okay, so a little bit faster. Daily. Wow, holy shit. Look at NASDAQ. Tech. Okay, so technology. Wow. Okay, so that was our previous double top all-time high supply. Bring it into the future, right over here, mid-June 24, 25, we closed above it. So go through the motions. Close above, green zone, stretch it into the future. Are we ever going to come back down into here, 22,000? Possibly. I guarantee you there's a shit ton of pending orders waiting to buy in there, but the market has not came. It's still squeezing higher. Higher highs, higher lows, higher highs, higher lows, higher highs. Oh my goodness. RSI is probably showing some substantial bearish divergence. You can see it's still making these highs. Slowly the strength is decreasing, but you're in an area of strength. It could continue to squeeze, could continue to drive. Look at the earnings we have in the after hours today. We have, what did we have? Meta, is it Microsoft Meta today in the after hours? Yeah, we got Facebook Meta, 405. We have Microsoft at 405. We have Apple and Amazon tomorrow, okay? Those are 4 heavy hitters right there. Those 4 names are the entire NASDAQ, okay? So, wow, holy, I need to take a breath, guys. Holy shit. 917, oh my God, we got to get going here. Okay, Now, let's just above the green block. We're in new charted territory up here. Okay, so this is all-time high territory. Have we hit an all-time high? Yes, we have. Guys, I'm going to probably piss my pants on this call. It's all good. If I do, just tell your friends your uncle pissed on the call. It's all good. I'm cool with that. No breaks, nothing. Just hit the likes if you want to see Unc take a pee in his pants. Hit the likes. And you'll probably see it live too. Hopefully my wife is not listening and my kids are not listening. But we got all-time high, 23,535 technically speaking. Okay, now, do we have some support levels below us? Some zones from what we see here. Here was a zone, okay? Whether you like it or not, that was red. At this time, it came up there, went back down. Came in there, went back down, okay? It impulsively broke. That was an all-time high break and they slammed it. But now we got volume above it. So this is an inside zone right here. Let's stretch it into the future. We are above this block. I guarantee you, I told you, there's a lot of buyers waiting in here. There could be a lot of buyers waiting in here. There could be buyers waiting where? 50% of this bullish engulfing candle, July 23, Wednesday. Let's just cut that in half. We've already retested it. You can see it, okay? It 50% cut, came in, retested, higher low, higher low. This is 23,175 daily point of interest above this block, okay? We're continuing to make highs. Do we have now some, like, let's just follow yesterday, okay? So yesterday we opened, we broke all-time high. So we got some levels above us right there. Let's put a line at that wick. We broke all-time highs right there. It got slammed back down and we came down and we closed bearish. Today, look at how we're opening. Similar like US 30, bullish ignited candle, okay? Right there. See, right there, we're open bullish ignited. Do I have a daily point of interest? Yes. Look at how they're barcoding. This is where you got your trap zone. It's bullish, bearish, bullish. If I wanted to consolidate all of this daily volume, right there, it's consolidated. This could be a continuing bull flag, continued to break out, but the all-time high wick got rejected rather hard, you know? So as they're holding it up still, but if we lose this, there's a lot of room for the market to sell down, okay? So make this kind of like, I'm making it neutral now, but I'll change it up, okay? So now let's just follow our candle. We opened right there. It's our lowest point of the day is in fact our lowest point, so it's purple. We opened bullish, coming all the way back up. We did in fact get above yesterday's volume, but it's still rather lower than this candle and this candle wick, okay? So still dropping. Did we make a high of the day? Yes, we have already, okay? It's right there. 23,407. So it's already been rejected. We're still holding this bullish volume. So yes, it could continue to fill back up. If we fill and we break this purple line, we could fill up to that yellow line. To 23,466. If it still has more volume, we can fill up to that all-time high. If it breaks out further, then we do our psychological analysis above, okay? Just real quick, 23,600. Just keep it at your 100 pip increments and go from there. And whatever trader you are, you go 25, 50 pip increments or 100. But if we lose this, if the sellers push it back down and we lose our ignited open, boom, we drop, we fill yesterday's wick. Easy fill to yesterday's wick right there. And then we start dropping down. Points of interest, body, body. I know it's a lot of yellow lines, but we take it one line at a time, okay? And then the bigger one, the zone would be right there. See the wick above, wick below, a little bit above. See how I can do this without even looking and using a Fibonacci tool? Why? Because I know where 50% is. I see that previous wick. There's the little bit above, little bit below. There's the green zone below us. Bada boom, bada bing, easy peasy, okay? Now, let's break this daily candle down into 4 hour, okay? Just let's stick with the 4 hour theme, okay? We pushed up, came back down. Higher low, pushed for the new all-time high. They slammed it down. Notice the volume is kind of staying below this yellow line, pushing right back down. Now we're in this consolidated zone, this neutral zone. Bearish, bullish. Again, bearish, bullish. We're trading inside here. This 4 hour candle is closing in 38 minutes. Right now, it's kind of like a spin top where we hit the high of the day, maybe push down. If we get more 4 hour volume pushing down here, we could have a really nice break, sell like similar to gold. However, it's got a higher low, bullish ignited open, and a higher low. So if you were to draw a trend line, it is ascending from the bottom, but we still have some serious selling pressure. So if we get a 4 hour candle maybe closing above here, yes, we could technically squeeze back up here. So it's hard to say. FOMC is at 2 p.m. and we got Wall Street market opening up. Go into the hourly. Hourly, it was moving real nice. We moved up. See how it moved down, held support, back up. We hit that all-time high right there yesterday at Wall Street. And then since then, it broke all the way back down. There was some moves yesterday to come back up, but you still see how the sellers absorb them and continue to push down. It did slowly come back up, but now we could be, that is a lower high. Okay, so if I draw like an hourly red zone right there, the purple line to the white line, that's a red zone. I don't want to kind of trade in there. I want to assume that sellers are still there and this could be coming down, right? Or if the buyers can close above there, I flip that zone green and then it could give me enough to fill up to that yield line. Maybe, who knows, possibly back up to that all-time high. It's hard to say, guys. We got FOMC today, Meta earnings after hours, Microsoft earnings after hours, and tomorrow we have Apple and Amazon earnings. It's hard to say. It's very difficult. Even analysts, professional analysts have no idea where it could go, okay? But what I do is I take it one bar at a time, one candle at a time, whether it's an hourly candle, whether it's a 5-minute candle, whether it's a 1-minute candle. I take it bar by bar, and I respect each one of these points of interest, placing heavy emphasis on the purple lines, meaning the high and lows of the days, yellow lines, daily points of interest, hourly white lines are hourly. And so see this big consolidated zone right here? That's where we're trading in. Right here, this is the daily 4-hour consolidated zone. We're trading in it. And I can see that there's some 5-minute. Look at the 5-minute support, like right here. You can see held support there, held support there, held support there. Got to have kind of like a 5-minute supporting area, which is right here. Again, stretching it into the future. Look how many times we're holding this support level, okay? So if we break below this, definitely could fill that wick and drop down to the lowest point of the day. And let me just get rid of this so you can see. There's the lowest point of the day. If we continue build, look at what it's building. It could be building a second bottom going into Wall Street. There it is. Second bottom building, could break the neckline, drive, but they could also do this, grab liquidity, slam it back down, and do something like this, okay? So let's be vigilant. Let's watch. Have some trading rules. When you go into market open, are you trading right away? The first explosion could be a bullish candle, could be a bearish candle. It could grab a wick and fake you out. Do you want to wait 5 minutes, 15 minutes, wait till 10? Who knows? You got to have some sort of trading plan, okay? Now, let's add our daily bar indicator, bullish ignited open, okay? The lowest point of the day. We can see right over here when it all started, there's 6 p.m., 1800 military time. And since then, see it was making higher highs, higher lows, higher highs, higher lows. Grabbed all the way to the highest point of the day right there, just prior to 8 a.m. and dropping down, still holding some 5-minute support. But we'll see if this will continue to hold in Wall Street or break down, okay? EMA is 9, EMA 200, they're there, green and purple. We're trading inside here. To me personally, NASDAQ looks, look at US 30 starting to make a move. I was just going to say NASDAQ looks cleaner to me, but right now US 30 is making a move early, okay, prior to NASDAQ. They're not the same securities, but US 30 right now is starting to make a move, okay? So let's see if they're coming up to the highest point of the day, maybe to take it out and then drop it, or to build off of this, okay? So we got 4 more minutes to market open. Just a quick little look at gold, okay? If you're in gold, see how it's kind of stalling here at that daily point of interest. Gold could see a nice little maybe momentum to the upside, but however, that's 150 pips, guys. Please do something with gold if you are in it, okay? Because we got to focus on NASDAQ and US 30. Pre-market, let's just take a look at the pre-market, and then I got to sip some coffee and probably piss my pants. Let's see here. I'm just looking at some like big numbers. I'm not looking at 0.5% or 1%. I'm just looking at something significant. Like yesterday, we had United Health was down 6%. That's what caused US 30 to keep selling. We have SoFi. So you remember SoFi was up 10, almost 20% yesterday on their earnings. They're down 7% in the pre-market. That could just be going into the earnings. They were up 10, 20%, and now they're just selling a little bit down, but they're down 7% in the pre-market. Everything else is just 0.25% up or down, 0.5%. 1%. Big names like Nvidia, plus 0.6%. Nothing real big catches my eye right now, okay? Okay, so, and again, please pick your security, whether you want to trade US 30, it's completely different weighting system than S&P, than your NASDAQ. You know, some of you guys are trading ES, YM, NQ, whatever it is. NASDAQ is different security, again, focuses more on tech. So if you're following the tech sector, this will highly be impacted by those big earnings coming up. But guys, if another thing, just heads up, if you've had a good session so far, if you've made some good money with the gold, now ask yourself, do you want to go in and double down? Do you want to use all that profit and go trading Wall Street? Or let's say, for example, you made $100. Do you want to risk that entire $100 on continue trading? Or do you want to risk $25? And if you lose that 25, you still make 75. That's what you got to ask yourself. You got to have some sort of account management, not just risk management, account management. You got to learn how to manage your winnings. You got to learn how to manage your trades. I'm lowering my risk now in Wall Street because I made my daily goal with those 2 gold sells, and I want to keep some money. I don't like, we're spending 3, 4, 5 hours trading. You know, we got to show something for it. So I'm going to reduce my risk now. If I take a loss, I'm not done for the day. I'm giving a little bit back, but I've still retained. I can walk away happy with a smile on my face. I'll probably pee my pants, but we'll see what happens. I'm going to wear a diaper next time. If you guys want to donate Depends diapers for myself and Dave, you know, if you want to see Ron trading in a Depends diaper, hit the likes. Getting old, Sherry. Getting old. Getting old. It's part of life, getting old. $30 seconds till market open. Notice what US 30 just did. They tagged the high of the day. Look, wow. They tagged the high of the day and they slammed it right back down. Get ready. Holy shit. Big fake out move. Yep. Let's see. Okay. So it's just following this candle, possibly going to open bearish and come down. But let's see. Okay. So just following this. Okay, so open, yeah, bearish, there's the follow through. So they faked out the market to the upside, grabbed the liquidity, took out the low of the day, dropped it. Okay, will it break this hourly support? Is it going to come back up? Is it still inside here? NASDAQ is pushing down. This is the first 20 seconds, guys. Okay, so just still choppy. But let's just see what they do. Where will the bodies close? Even if we've got to wait 5 minutes, we've got to wait 5 minutes. I know some traders get uptight. Why is he waiting? Why is he waiting? There's a bearish candle. Why is he not selling? Go ahead and sell it if you want. Test it out. I'm not telling you to not sell or trade or whatever. Do what you want. But even those buyers up there that were buying right into Wall Street, now they're in severe drawdown. Okay, so sometimes just wait for a body to close. Yeah, you're going to miss out on a couple of trades. I understand. I'm a scalper on the 1 minutes. I know how many trades I miss out on a daily basis. You can't get caught up on that. Just stay focused. Let's see. First 5 minutes of Wall Street. Let's see where it closes. Let's see how far. Let's see the range. Let's see, are they taking out lows? Are they taking out highs? That's what trading is, guys. You got to analyze a little bit. Okay, look at now. Came all the way down. What happened to, if you sold, did you pip and dip, or are you now like panicking that it's going to come back up? All this shit, guys, you know, trading is very psychological. If you want, wait for the candle to close, but just observe what's happening. Ask yourself, when that candle opened, would you have sold? When it came down, would you have gotten out? Would you have gone greedy, wanting more? Where's your stop loss place? All of these things. Okay, so what happened? They took out the high of the day prior to Wall Street. Wall Street opened bearish with that continuation, took out that hourly support, also took out that wick right there. But you see where it got saved? Right there. that 430, that red line, the red line where I placed right there, equal bottom lows, they protected the low of the day. That's a big clue. Okay, this could flip up bullish. They already tested that high of the day. Okay, so stick with me, guys. Okay, and NASDAQ is breaking down. Will it close below this green zone? We haven't seen one bearish candle close below this green zone. Not yet. This might be the first one. Okay, and now US 30 is coming back down. Excuse me. Okay, so wow. Okay, so NASDAQ is really, really pushing down. Let's see now when it reaches its low of the day. Okay, so far NASDAQ also took out that critical low wick right there, broke it. It's got a higher low from the lowest point of the day. Will it come all the way back up? Where will they close it? We still have 2 more minutes to go. US 30 is still in this range with all of this volume. Okay, still in this box, still consolidating, still tough market open. Okay, so now we got 90 more seconds to go. Look at Dow has completely flipped now. Okay, so tweezer bottom lows. Okay, now coming back up bullish. Okay, where will it close? Wow. Okay, so lots going on. US dollar reached $99.50. Okay, so nice psychological. Wow. Coming back up. Let's follow this volume now. Okay, 50 seconds to go. Also, NASDAQ came down, also building. We could see bullish momentum now. Okay, maybe they took out the lows. They took out the highs prior to Wall Street. They took out those lows, tweezer bottom lows. Coming back up with this bullish engulfing candle. Where will it close? Okay, will it come back down? 30 seconds to go. Oh, man. Spicy market open. It's spicy. Gold. Wow. Gold continued to break down, guys. You can use the yellow line again as resistance now. Continue to push down. Congratulations on gold. That could be running, what, 200 pips? Man, unbelievable. Okay, so we closed as a bearish spin top. Out of all of that, look at the little volume. Okay, so still, if this was just a regular 5-minute candle, I'd still be waiting. I don't see any big confirmations above the high of the day. I don't see any closing volume below there. It's a large range. Okay, the opening range of that first 5-minute candle on US 30 is approximately 85 pips. That's your opening range so far. NASDAQ following that big rejection wick, coming with a bullish ignited open. Okay, so you got a double bottom. It looks like a double bottom. One bottom neckline, second bottom right there. Liquidity grab. Okay, this is part of our playbook. Now it's coming back up to test the neckline. So if you get that break and close, we could get a retest somewhere. We'll find a point of control, and maybe we'll get that NASDAQ breakout for the high of the day. But just stay with me, guys. Okay, so you see the second bottom, liquidity grab, ignited body candle. You can go in on this candle, or you can also wait for confirmation for it to close above there. That's your choice. Okay, I would recommend waiting it out. Trevor, these are very long candles, hard to scalp. Sometimes the long candles are, in my opinion, are easier to scalp because it forces you to go up 20, 30, 40 pips, make a decision quickly and get out. Like when it really teaches you discipline when you see that, like that big bearish candle that came down, pip and dip. When it came back up like that and that candle opened like that, you could pip and dip out of that. But, holding these things to me is harder. That's just me personally speaking, Trevor, just... Like as a scalper, I'm saying I scalp 1-minute candles. It makes my decision easier when I get a big, quick move. 20, 30, 40 pips, easy. I'm in and out. I don't even think twice. It's these type of moves that are consolidating. These are the ones that are hard to trade. You're holding your buy, you got your stop loss, you're watching it come down, go in profit, come back down. That's the mental game. Okay, guys, so you see how we came up there, it broke that high, the neckline, got rejected coming back down. How much of this volume are we going to retain? 2.5 more minutes to go. Dow is just stuck inside here, so no real big movement as of yet. Maybe we can see what gold is doing. Okay, gold is just continuing to maybe push down. Wow. Okay, so I just want to measure that move. Holy shit, 220 pips down there. Wow. Guys, leave us a like on YouTube. We do appreciate it. If you're just joining us, leave us a like. We appreciate the likes, and that's why we want to pay you guys back, pay it forward. We're going to come back for a session with myself for live FOMC at 1 p.m. later this afternoon. But also join Dave right after me at 10:30 in the private session. Here we go, guys. Okay, so 1:45 to go. Okay, so it's still building inside here. Any news? Let's see if there's any news regarding anything for the markets. U.S. economy rebounds from first pullback in 3 years. U.S. economic growth rebounded in Q2 as the widest swath of President Trump's tariffs took hold. Okay, so that was the GDP, advanced GDP numbers we saw. That's why the U.S. dollar is really strong and gold is dropping. So Fed set to hold rates steady. Mr. Powell, we'll see. Maybe knowing this might force him to cut rates today. Like the GDP numbers that came in. I know it's advanced numbers, but that's important, guys. Holy shit. What if we get a 0.25% decrease during FOMC? The markets could pump right back up. And we have Meta and Microsoft and Amazon and Apple earnings. Those 4 corporations in the next 2 days. Trevor, you hope so you're renewing your mortgage? Yeah. See, guys, look at NASDAQ. We came all the way right back up there and they slammed it all the way back down. Okay, so pip and dip system strategy works in this style of trading. Otherwise, you know what other style works best? Patiently waiting. 50 Cent has a song, Patiently Waiting. Okay, listen to that track. It's a really good one. Okay, so we're patiently waiting right now. And if there's no trade, there's no trades, guys. That's what a mature trader does. I don't need to force a trade just to say I'm in a trade on YouTube and make everybody happy for likes. If there's no, I should be getting a like right now because we're patiently waiting. You know how many years I had to learn to patiently wait? Because I would be trading all of this garbage right now. I would have probably lost my daily goal trading all of this shit right now. Like, look at NASDAQ. Maybe I would have sold in there. Now I'm in drawdown. Maybe I would have got pissed off, bought that, and then they slam it back right there. 2 silly trades, and I'm mad, and I'm hedge trading, and I've lost my mindset, and I've lost my account. So there's nothing wrong with patiently waiting. See how we patiently waited for gold, found some good trades. Right now, this is too whipsaw. It's too much going down, going up, going down. We're still, if you look at the volume wise, not even looking at the wicks, we're still stuck in this range here. But it is building now, this double bottom, but we need that closing price above here. Okay, so again, it looks beautiful, but they could fake us out too. We could buy and then they slam it back down. I'm waiting for follow through. I want to see, can the buyers close it above that neckline? I don't want to just guess. I want to see full closure. Okay, and now US 30 is pushing down. Okay, so when I'm not in a trade, I'm looking, is it going to break that tweezer bottom red line? There was that low right there set at 4:30 a.m. Eastern. It came down again during Wall Street. It held. Is it coming down again? It's held a higher low actually, so it didn't physically break that yet. We're getting clues in the market. Now it's coming right back up. So they're really protecting the low of the day today on US 30 during Wall Street. Wall Street's not over, just started, but so far with the biggest volatility at market open, they are protecting the lowest point of the day, the opening position. Okay, I process all of that. Because if it builds off of this, we could get a nice bullish leg coming up. Like look at NASDAQ again. It came right up out there. If you impulsively bought, you're in drawdown, unfortunately, okay? When us, we're just patiently waiting. We have no stress in the trade. We're just watching. Again, I said, if you want to trade, go small. Feel things out, right? If you get faked out, it's all good. You lose a couple dollars, but don't lose a couple $100. That little feeler trade can help you get into the bigger trades. Believe your uncle. It helps. Okay, now they slammed it back down. Wall Street is just playing games right now. It's playing games with buyers and sellers. Okay, and like maybe we got to wait till 9:45. We got a new 15-minute candle opening. Look at this. Look at the 15-minute candle of how disgusting is it on NASDAQ. It opened, came all the way up, came all the way down. We're right back here. Okay, so let's stick with the fives. Watch where the fives are going to close. Go to news. We do have news coming up, 9:45. Canadian news. Bank of Canada monetary policy is coming out in 90 seconds. Rate statement and the overnight rate. Then we got the Bank of Canada press conference. Pretty much, I believe that I live in Canada. I think that they're going to pause. I would love a decrease to here. I want to borrow some money and make some more money in the markets and flip homes and buy homes and do all that shit. But I don't think that they're going to lower the rates yet. Probably a pause. Jay, you almost bought it, but as soon as I clicked your buy on the computer, it did something weird and didn't take it. Yeah, that happens. Okay, so now we got one more minute to go into the close. Guys, maximum time I'm on this call is 10 a.m. and then I got to get out of here. I got to use the washroom real bad. And then give you guys a break, and then Dave will be starting again at 10:30. So we needed to have a break, everybody. And maybe the volume will get much better after New York, okay? Remember, let it digest all of the news, and then we might continue to trade. Now let's watch NASDAQ. Now it's filling up that nice double bottom, could close with the volume. There's my yellow line up there, okay? So it's good push. Here we go, okay? So watching NASDAQ right now. Let's see if it can close. Where would the neckline be? Neckline is right here. Okay, if it closes above there, that would be my green zone. You could get maybe a small pullback into there, maybe buy off of that. Okay, so far, it's kind of consolidating right at it. Let's see. Okay, one more time, if it can push down. It hasn't retested this zone yet, so it could technically just start to fill and break out of here. But if you're waiting for a technical retest or to come into 50%, you could be waiting, right? Okay, this is the first initial break. Will it take out the highest point of the day? Maybe it takes out the highest point of the day, then we'll get a retracement back in this green zone, and that could be strengthening as it's taking out the high of the day. So sometimes, if you miss a trade, it's okay. Let's see where it will go and if it will pull back, okay? So you have to be quick with that candle. It opened small pullback, and see how small those wicks are? That was a wick fill and a pop. Had you taken that, you should be up at least 10 pips in profit from the break of that wick. Yeah, it's NASDAQ, it's slow, it's 13, 15 pips. There you go. But more importantly, it broke the highest point of the day. So now we have a new daily high wick. Once you take out the high, then let's see the retracement coming down. Will we get a retest in here, or will we figure out where this candle closes? Will it close back above the new high of the day? Will it come all the way back down? Okay, so that would have been a quick, if I got into a buy there, it would have been a quick candle. Would have been going up 15 pips. Is that enough for you to maybe go to a break even, or are you letting the trade mature and continue to develop? Okay. So I'm waiting for a pullback. I never got in on that candle, waiting for a possible pullback here, or maybe more deep down into 50% of that bullish candle, okay? Or it could be a fake out, right? If they could just take out that high of the day, grab that liquidity, and slam this thing right back down. It could come bearish and close below here, and then we're dropping right back down. Okay, so this is an interesting 5-minute candle. Whether you're trading it or not, it's particularly interesting for NASDAQ because it did break the high of the day. And look at now the response coming right back down. US 30 is just stalling right in here. So let's let US 30 do its thing. Look at that now. Okay, so NASDAQ came all the way right back down. 2.5 minutes to go. And also, guys, don't forget, I believe, do we have 10 a.m. news? Yes, we do. What do we got? Pending home sales. Okay, not that big, but pending home sales in the U.S. still very important. And then our federal funds rate later on. Okay, wow, look at NASDAQ now. So we took out the high of the day, liquidity grab, come all the way right back down. Now we're getting some volatility, okay? I'm still on sidelines. I'm still watching. And now US 30 is breaking down. I want to see if US 30 is going to take out the lowest point of the day. You know, will they take it out, take that liquid, and then swing it back up? Okay, Bank of Canada Governor McClain is speaking now. Okay, just talking points here. Is anybody in a trade right now since Wall Street market has opened? Is anyone in a buy, sell in any of these indices right now from 9:30? Trevor, you're in NASDAQ sell, right? You were in that before, prior, yep. Okay, let's see, maybe that can be a complete fake out of the daily high. Yep, okay, so now US 30 broke the lowest point of the day. Let's get ready, guys, because we could possibly maybe sell with this momentum. Jay, you just bought NASDAQ? Yeah, watch it. It's got higher lows, higher lows, higher lows. Okay, so you see the daily candle flip into a shooting star now of US 30. NASDAQ is still holding bullish body. Okay, so that was a break. Did we break that hourly structure? Yes. So like give or take a little bit above, a little bit below that white line. If we do come back up to retest, I would assume that that's a red zone now. Maybe 50% cut line of the candle. Where's the cut line? It was those previous tweezer bottom lows. Look at how now that red line represents 50% exactly of that volume. Sometimes that's how you learn price action, by noticing these things, okay? Tweezer bottom lows right now, so get ready. It could possibly continue to push down. It didn't break there. Is it going to come back up? It's still holding this small doji. Get ready. This could possibly break down. It's that still doji, still hanging in there. You know, like gold, we want to obviously wait for it to come back up to this red zone and then possibly sell. It could come up to that red line, but ultimately the best selling point is the retest. We haven't retested, but this one could already retest and got that. Look, it's got those equal bottom lows. It could break and just drop, but it could break and just drop to that yellow line. You could pick up 20 pips. But it could reverse there. So maybe it's best we wait for a reversal. Like, you know, on the gold, where I went in initially, I went in early and then I caused a little bit of drawdown. And then if I sold that, I would have, so similar, you know, setup. Okay, I'm waiting. See how it's holding those equal bottom low wicks? That's why I didn't sell there. Now I got to watch, will it come up to 50% of the candle? That red line is that low and that tweezer bottom low. And then you see how it turned to support, turned to momentary resistance. And And NASDAQ is just still trading inside here. Guys, this was a nasty like Wall Street market open. We had a lot of news leading into it. We also have FOMC decision later on. Maybe it's not best, we look for a trade right now until maybe NASDAQ will close below here, and then boom, we're dropping too. Okay, so I think US 30 has accumulated a lot so far, hasn't broke. It's ready to maybe possibly break here. I've been waiting for the retest 2.5 minutes now. Oh shit. Okay, there was the break. Now it's coming back up. So let's see if it comes back up and goes back down. I see the break. Okay, now it's testing again, coming back up to the red line. Let's see one more push down. We've already broke. Okay, coming back up. It's that spin top. You gotta continue to watch these things. NASDAQ came in the green box, back up. Sorry guys, I'm even losing my voice here. Okay, I'm gonna go into sell now. I think I've given it enough time. I'm gonna place my stop loss, above that red zone again. I'm gonna sell on US 30, looking to see if we can come down to that yellow line, but break it. Where can we break down to? Got to look, okay, break, nothing to drop. Where can we drop? We got to look all the way over here. Okay, maybe, possibly, I would say, like right in there, 562. Let me get back to this. Oh shit, as I did that, it was dropping right down to that yellow line. Okay, that's why I should have had my stuff done prior. Okay, so it dropped 22 pips. I didn't get out, guys. Unfortunately, I was looking at the back of the charts for that yellow line. So it came down. Unfortunately, I didn't react. Okay, so now it's got to maybe come and start to retest some areas. Closing in 1 minute. Now I got to see the volume. We continue to push down for that lower low. Can we get volume closed below this red line? Can we get it closed below here? Okay, got to follow the volume now. I'm in a sell now. I didn't do anything at that 20 pip drop. So I got to follow the volume now. Okay, so we're going to watch this close. Still hasn't retested 50% of that candle. We still haven't got the real retest of the upper zone as of yet. So I just want to see if lower highs are intact and can keep this thing down. And what time is it? We're going into 10 a.m. in 5 more minutes. Okay, so here's the retest, 50%. And watch that NASDAQ close as well, okay? Here we go, okay? So there's the close. We're still below 50%. We've got a bearish ignited candle, but we still have that bullish body. So can we come down with this bearish engulfing body and engulf all of this? We came down to 50% of that bullish candle, got some support. So it could definitely flip the ignited bar, fill that wick, then start to retest 50%. But with Wall Street's volume, could definitely break above that 50% and test more the actual hourly resistance up here. But we got that bearish candle still intact. So can we continue come down, maybe push and get that volume closing below the bullish body right here? Sometimes I like flipping to the 1 minutes watching. The 1 minutes are building. Okay, here's the close of a 1 minute candle. So like I want to see if 1 minute candles, including that 5 that I'm in, can close back below here. Got a lower low, lower high, lower low. This like lower high area, if it can be lower high and then push it right back down, but it's still bullish. Okay. Yeah, I'm going to close this trade out. I don't like it. I'm out. Okay. Sorry, guys. I had to exit this trade. I don't like the way how it's building on the 1 minutes, and I don't like the 5 minutes. So I took a loss right there. I got out. I'm not going to leave it to come all the way up to my stop loss. I just don't like the way how it's building right now. So I exited early. I took a loss, but I'm not going to give away my entire stop loss all the way up there. I just don't like the way how it's moving right now. I can revisit this trade later on. I just don't like the way how it's currently developing. I didn't get the close that I wanted. So sometimes I do this. I don't sit in trades for it to just come and hit my stop loss. I watch how I didn't get the move I wanted and I exit. So did exit in this trade, lost 20 pips, but better losing 20 than losing like 50 or 40. Okay. I don't like it, guys. I don't like that setup. So why sit in the trade and just continue going into drawdown? So I have more of a scalper's mindset, guys. I'm in and out of trades. When I see it, there was no point in still holding that. I saw in the 1 minutes, the way how it closed above, came into 50% right there. I didn't like that setup. I would like to scalp buy this, not sell it. And yeah, it's just, markets are tough right now. NASDAQ is doing absolutely nothing. Okay, still inside here. US 30, it's kind of right back to where we started at 9:30 open. Okay, so, I'm just going to step away from the markets. I'm going to come back during FOMC, and then we'll start off with another top-down analysis. We'll clean up. We'll see how everything is moving then. But if you're going to continue trading, that's up to you. Gold, wow. Okay, so holy, that's 250 pips on gold from that position right there. Wow. Okay, and look at every single successive move. Volume closed below. You're below that now resistance yellow line. Continuing to push down, it's lower highs. Continue to go down. You got a trend lower lows, lower highs. Buys there's no double bottoms. There's no bullish engulfing candles. They're coming up. They're getting rejected back down. A lot of selling pressure on the gold. US 30 is going to trade in here. Maybe it's going to continue to move up bullish, but I don't know. Okay, it might need to develop another bottom down in here, but that's one significant bottom. Man, if I stayed with this when it was dropping, I possibly would have done something. But sometimes you go back and you look. That's why it's always good when you do your top-down analysis, do a little more, just a little more below, so you don't have to waste your time during when you're in a trade, especially if you're scalping. These lines should be all plotted out. Okay. And news-wise, okay, so we got pending home sales coming out. Bank of Canada will be releasing their interest rates at 10:30. More importantly, Dave will be starting 10:30 in the private Zoom. Join, guys, stocksnipertrading.com. Join all those private sessions and the Discord. I'll be coming back since you guys did hit the likes. We'll be back at 1 p.m. We'll go for 2 hours, 1 to 3, and then we'll wrap it up. But we'll go through FOMC. That's where we'll look at gold, NASDAQ, and US 30 again. And we'll put them all three on one screen. We'll do gold, NASDAQ, US 30. We'll do a split screen with 3 charts. I know it's going to look busy, but it's better than flip-flopping chart to chart to charts. Hope you guys had some fun. I really need to go to the washroom, guys. I don't mean to be rude, but I really need to go. I haven't moved off this chair and I've had 2 coffees and I got to go, guys. Thank you guys so much for the support. We do appreciate you guys. Enjoy your day today. Trade smart. Remember, risk management, account management is the #1 thing as a trader to survive in these volatile markets. Please be smart. If you've hit your daily goal, forget about FOMC. You don't even need to entertain FOMC. Go enjoy your day if you've hit your daily goal, okay? I would be doing the same too if we weren't streaming, but we love streaming. We enjoy it. You guys earned it by hitting the likes button, so we have to be here. So I will be back. Dave will be next. And just looking at the Discord signals, guys, just updating these real quick. If you guys took any of the signals, commodities, right over here, selling gold at 33.15. Okay, nice level. Close below, a retest and a drop of break of structure. Okay, that's running 150 pips. And then continuing the short, continuing to push down, taking out lows, guys, at that 33.15. We also had, what else we got here? Oil, okay, a long on oil, $68.64. We had called it out here. Yes, there was that little dip below, but again, you got it come back up. They scooped the liquidity. You're still above 50% of this big bullish candle, and you got some closing volume with a proper retest on that, okay? There's the proper close. There's the retest. If you bought right there, maybe place I'm a scalper, so I would be placing my stop loss below this structure or below 50% of that point of control. We give you more room to breathe because we're looking for more than 20, 30 pips, right? So you're looking for a bigger move, and that's running 100 pips right now. So congratulations on oil. FX pairs, some Forex pairs right over here. The long, I told you guys earlier this morning on USD JPY at the 148.17. Any Forex traders looking here? Okay, there was some consolidation below there. Nothing closed above. So if you went in yourself on impulse. You got to learn what are impulse and what are confirmed trades. There was a candle that impulsively broke, closed above, closed right at it, retest, push down. You could take that candle if you like, or you wait for it to close and you could have entered on this candle. Anywhere in here, now you're looking at structure. You closed above there. There's the big bullish candle. I would be looking trailing stop loss, 50% of this candle, 50% of there, continue to build. Now this resistance area could turn to ongoing support to support this move to continue to go back up. So that's USD JPY running 85 pips. Some traders have a 50 pip daily goal, and if you got a good plan, good risk management, you're patient, you're disciplined, I'm sure you can find 50 pips in Forex. You can find it on an index. You can find it on commodities. You can find it anywhere, okay? You just got to be patient. Allow the trades to come to you. Everyone on YouTube, there's a free Telegram channel pinned at the top of the channel for you guys. It's right over here. Please sign up to this. We do give a lot of giveaways. We're going to do another $15,000 prop firm giveaway in a 3-month. Congratulations to Isaiah that won that, and we'll do another one. If you want to join the team, guys, lots of good information, blogs, free blogs available for everybody. All of our live sessions. Here's our weekly trading schedule with myself and Dave. And education, we got lots of education. Everything we talked about in today's call, I'm sure that there's an educational video on everything that we discussed today. If there isn't, I promise you I will make one, okay? But gotta go, guys. Have a great day. Enjoy your day today. Follow that NASDAQ. Let's see if volume can continue to close below there. Maybe you might be able to change this green zone to red, maybe push down with it, or it's continuing to build. You see, guys, proper maybe selling point was the red box, came close, but maybe wait for that official bar to close, maybe retest, then you get that second leg coming down. If I was still trading, I would be staying with this volume, guys. But that's it for me. I got to go. Enjoy your day. Have a great day. God bless. And we'll see you guys later this afternoon. Join us 1 p.m. Eastern. We'll be on, okay? Have a good morning and afternoon, and enjoy the rest of the session with Dave, and we'll see you guys in just a little bit. Okay? Have a good day, guys. Thank you guys so much for the support. We appreciate you guys. Thanks, everyone. Enjoy your day, guys. Have fun with Dave, and I'll see you guys later this afternoon. You guys enjoy.
Hey guys, good morning. Welcome to the live session of Stocks Network Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.